Okay, Namaskar everyone. Hi, how are you? So nice to see you all again. And finally, I can see Raj Lakshmi also today. So welcome. And in our last lecture, we were discussing about how to compute your total income, and after the total income is computed, then from that total income, on that total income, what rates of taxes are to be applicable, and how to determine the tax liability. Okay, so that discussion we were doing yesterday. Okay, so what we are supposed to do, that when the total income is calculated, on that total income, now we are supposed to apply some rates of tax. Okay, so what are the tax rates which are supposed to be applied on the value of total income to determine the tax liability? So the tax rates are two types of tax rates, but for that we need to bifurcate our total income into two parts. Some part of our total income will be known as special incomes. I gave you some idea about special incomes, right? No? So on that special incomes, we'll apply special rates of tax and we'll calculate a tax amount. But on the balance part of the total income, which is treated as normal income, normal total income, will apply the normal tax rates. And by applying the normal tax rates, we'll calculate tax here also. So the tax on special income plus tax on normal income, both taken together, will give us tax, total tax. And that is a tax on our total income. See, this is the basic amount of tax which we are supposed to pay. But along with that, if surcharge is applicable, we'll have to give surcharge also. But sometimes it is not possible to, apply the surcharge, then we'll have to check that whether rebate is applicable or not. And if rebate is applicable, then from that total tax on total income will reduce the rebate instead of adding surcharge. So either of the two things will come. Either the surcharge will be added or the rebate will be reduced. So it can be any of the two, or it can be none of them. Meaning that neither the surcharge will be there nor the rebate will be there. Okay. So when the surcharge will be applicable, how much will be the rate of surcharge, when the rebate will be applicable, who will get the rebate, what will be the amount of rebate, that we are going to study today. Okay. But first of all, learn this entire process. Okay. In this process, once you add surcharge, then the tax becomes tax on total income including surcharge. Or when you reduce the rebate, then your tax on total income is after rebate. So whatever tax which you are getting, including surcharge or after rebate, on that tax amount you are supposed to apply 4% cess also. That is known as health and education cess. So after adding 4% health and education cess, what you will get, friends? You will get gross tax liability. Now this is the total tax which you are supposed to pay on your total income, including surcharge, after rebate, plus you are supposed to do the health and education cess and all. But from this tax, no, you are supposed to get what? You are supposed to get the credit for the taxes which you have already paid during the previous year. Credit for prepaid taxes. And what are the taxes which we pay in the previous year as prepaid taxes? That is TDS, TCS, or sometimes advance tax. Okay. So TDS, TCS and advance tax which we have already paid during the previous year, that we will reduce from our gross tax liability, so that we can finally get an amount of net tax liability or even the refund amount. But see, along with that, in the notes you can see there is relief also which can be given. There is AMT credit of section 115 JD, that also you can take. But these things are not relevant for you right now. Those will be learned at a later on stage. So right now I have not made any discussion about relief or AMT credit, because it is a premature time right now to discuss anything about these two things, right? No. So right now don't focus about these things. We'll learn them as the time will come. We'll definitely learn them also. Okay. So net tax liability or refund due. Now please pay attention. See, when we are bifurcating our total income, no, when we are bifurcating our total income, on the special incomes, no, we'll always pay tax at special rates. If I am an individual earning this income, how much tax I will pay? The rate is prescribed in Income Tax Act, that tax I will pay. What if I am a partnership firm earning this income? Will a partnership firm pay the same rate of tax? The answer is yes. So the rates of tax which are applicable on special incomes does not differ assessee to assessee. They remain same. Whatever type of assessee you are, if you are earning this income, you have to pay this much tax. So they are not assessee specific rates, they are income specific rates. Any assessee earning this income will pay this much tax. That's it. Getting my point? So if a company is earning this income, if a individual is earning this income, if a partnership firm earning this income, the rate of that income will remain same. The rate will not change assessee to assessee. Okay. Now when we are coming to the balanced total income part, in this balanced total income, whatever rates which are applicable over here, they are normal tax rates which we get from Finance Act. Okay. And these rates are assessee specific rates. They change from assessee to assessee. So if you are an individual, your normal tax rates are different. If you are a company, your normal tax rates are different. For partnership firms, the normal tax rates are different. So assessee to assessee, these normal tax rates will change. So what we are going to do now, we are not worried about this special incomes and the tax rates applicable thereto. Why? The reason is very simple, that these special tax rates and the special incomes, will be dealing with them while doing the specific provision in later on chapters. So in later on chapters, we'll definitely come across to these incomes, and at that time only we'll discuss those tax rates along with those incomes. So don't worry about these rates. These rates will anyways we are supposed to do, but at a later on stage. But we are supposed to discuss right now these normal tax rates. Okay. So how many types of persons are there? Come on, tell me. There are 7 types of persons. 7. Number 1, individual. 2, HUF. Number 3 is company. Number 4 is partnership firms including LLP. Then 5 is AOP BOI. 6 is local authority. 7 is AJPs, artificial judicial persons. So for all these 7 types of persons, the tax rates which we are going to study are known as normal tax rates which we are going to study. Okay. So first we will be discussing about individual, HUF, AOP BOI and AJP. Because for these 4 persons, the normal tax rates are same. So if you are individual or you are HUF or your AOPBOI or your AJP, the tax rates, normal tax rates applicable on your normal total income for all of you is same. Okay. And the normal tax rates are like this. Come on, let's see. Normal rates of tax as per the Annual Finance Act. So can you see point number A on the screen? In point number A, individuals, HUFs, AOPBOIs and AJP. Sir, what about the partnership firm? Sir, what about the local authority? What about companies, sir? We'll have a discussion about them after we discuss this. Okay. So first of all, who is this? Individual, HUF, AOPBOI and AJP. 4 persons. So whenever you compute the total income for these type of assessees, special incomes will be charged to tax at special rates. There is no change. But the total income, normal total income for these persons will be taxable at these rates. And the rates are given in slabs. Can you see? First slab is given 2,50,000. Then after 2,50,000 till 5,00,000, second slab is given 5%. Then 5 lakhs to 10 lakhs, third slab is given 20%. Then whatever income which is above 10 lakhs will be taxable at the rate of 30%, that is given in your fourth slab. So there are slabs which are given. for the taxability of your normal total income. So you are supposed to take your total income. Out of that total income, whatever your normal total income is there, normal total income is divided into these 4 slabs. Out of the entire normal total income, first 2,50,000, no need to pay any tax. That is your basic exemption limit. Up to first 2,50,000 of your total income, the government is not charging any tax. Then whatever total income you are earning above 2,50,000 till 5 lakh rupees, on that total income, on that part of total income, the government will charge 5%. Now, out of your total income, whatever total income you are earning above 5 lakhs till 10 lakhs, on that total income, the government will charge 20%. And any total income which you are earning over and above 10 lakhs, on that total income, on that part of total income, you are supposed to pay 30%. I hope you are understanding. So, for example, your total income happens to be 12 lakhs. And by total income, I mean normal total income. Okay, no? So, in your total income, special incomes will be taxable at special rates. But after special income, the balance total income which remains is 12 lakhs. Example. So, on that 12 lakh, how much tax you will pay? So, you are supposed to bifurcate, you are supposed to divide this 12 lakh in these 4 slabs. On the first 2,50,000 out of 12 lakh, on the first 2,50,000, you will not pay any tax. Gone. That is basic exemption limit. Now, from 2,50,000 to 5 lakh of your total income, that is another 2,50,000, you will pay 5% amounting to 12,500. Then 5 lakh to 10 lakh of your total income, that is another 5 lakh rupees, you are supposed to pay 20% tax amounting to rupees 1 lakh. And how much is the total income? 12 lakh. So how much total income goes beyond 10 lakh? 2 lakhs. That will be taxable at 30%, amounting to 60,000. So tell me, first slab nil. Second slab 2,50,000 into 5% will give you 12,500. Third slab 5 lakh to 10 lakh, that is this 5 lakhs, taxable at 20% will give you a tax of 1 lakh. And the last slab, any total income above 10 lakh, how much is that total income, friends? 2 lakhs. On that 30% is 60,000. So 12,500 plus 1 lakh plus 60,000. Are you getting this amount? 1,72,500. This is the normal tax which you are supposed to pay on your normal total income of 12 lakh rupees. But this is applicable only if you are an individual HUF, AOPBY or AJP. Sir, what if I am not earning 12 lakhs? Sir, I am earning only 9 lakh rupees. Then, sir, then this slab will not come. You will be covered till this slab only. On first 2,50,000, you will not pay any tax. Then 2,50,000 to 5 lakh, you will pay 5%. That is 12,500. Now, can I say 5 lakh to 10 lakh? You are not earning till 10 lakh. You are earning till 9 lakh only. So 5 to 9. Anyways, from 5 to 10, you are supposed to pay how much? 20%. So from 5 to 9, by default, you are supposed to pay 20 only, no? So how much is the income which is getting covered in this slab? 5 to 10? No, 5 to 9 only. So on that 4 lakh, you are supposed to pay how much? 20%. So 80,000 in this slab and 12,500 in this slab. How much is the total amount? 92,500. This will be your tax, normal tax on 9 lakh rupees of your normal total income. Sir, what if my total income is 4,80,000, sir? Even this slab will not come, this slab will not come. You will calculate till this slab only. On first 2,50,000, will you pay any tax? No. Then 2,50,000 to 5 lakh, whatever income is there, you are supposed to pay 5%. No. So are you earning till 5 lakh or you are stopping at 480 only? 480. So 2 lakh 50 to 5 lakh, no, 2 lakh 50 to 4 lakh 80, giving you 2 lakh 30,000. On that 2 lakh 30,000, calculate 5%. So how much is 5%? Come on, tell me. 5% of 2 lakh 30,000? 11,500. Got it, everyone? So your tax liability will be 11,500. Your tax, normal tax on your 4 lakh 80 rupees of your normal total income will be 11,500. Sir, my total income is 2 lakh and 10,000 only. This slab will not come, this slab will not come, this slab will not come. Your entire total income will be covered in this slab only, no? Because up to 2 lakh 50, there is no tax. How much you are earning? 2 lakh 10. Will you pay any tax? No. Go. Done. Hello? Are you all understanding? Sure? Okay. Now please wait. Wait. So what is the basic exemption limit? Come on, tell me. Basic exemption limit is 2,50,000. Now 2,50,000 basic exemption limit is available if you are individual, if you are HUF, if you are AOPBY and if you are AJP. But if you are a senior citizen, who are you? Senior citizen. Come on, tell me. HUF can become a senior citizen? AOPBY can become a senior citizen? AJP can become senior citizen? No, only individual can become a senior citizen. But which type of individual will be a senior citizen? Come on, tell me. Anyone? I want participation from all of you. Come on, tell me. Which type of individual will be treated as a senior citizen, sir? You all know this. Sir, age 60 or more, sir. Right, no? If the age is 60 or more, senior citizen, no? You want to believe, even if your age is 60 or more, still you will not be a senior citizen if you are not a resident. Only those resident individuals whose age is 60 or more will be treated as senior citizen. So under the Income Tax Act, to become a senior citizen, you see age, that it should be 60 or more. But along with the age, you are supposed to see one more very important thing, the residential status also of that individual. If the residential status of that individual is resident and that individual is 60 years or more at any time during the previous year, only then that individual will be treated as what? Senior citizen. What if your age is 85 years and you are still a non-resident? Even if your age is 500 years, no, still you will not be treated as a senior citizen because you are a non-resident. All the non-residents will be covered, non-resident individuals will be covered in category A. All the non-resident individuals. All the resident individuals will also be covered here, but their age should be less than 60. But any resident individual whose age at any time during the previous year is more than 60 or equal to 60 also, then that type of individual will be treated as what? Senior citizen. He will be covered in part B. And for senior citizen individuals, my dear friends, the slab rate starts from 3 lakh rupees. First 3 lakh rupees, they will get basic exemption limit. So can you see here, senior citizen getting 50,000 rupees more as a basic exemption? Yes or no? That means 2 lakh 50 they are getting, but they are getting 50,000 more. That means the total basic exemption limit is not 2 lakh 50. The total basic exemption limit is 3 lakh rupees. So on their total income, from their total income, on the first 3 lakhs, they are not supposed to pay any tax. Then 3 lakhs to 5 lakhs, they'll pay 5%. 5 to 10, they'll pay 20%. And above 10, they will pay 30%. Akshaya, are you understanding? Sure? Now tell me, age you will see. Age should be 60 years or more. Throughout the year or at any time during the year? At any time. Even for a single day in the previous year, you touch the age of 60, no, for the entire previous year, you will be treated as what? Senior citizen. It is not necessary that you should be 60 or more throughout the year, no. Even for a single day your age touches 60, no, you will be treated as what? Senior citizen. For the entire previous year, your status will be senior citizen only. Getting my point? Now, what if you are a resident individual, your age is 80 or more? Then you become a very senior citizen. Very senior citizens are known as super senior citizens. What will you call them? Super senior citizens. Super senior citizens are those, they are senior citizens only, but they are little more senior. Hence, they are known as very senior citizens or super senior citizens. Their age should be 80 years or more at any time during the previous year. So, any resident individual whose age at any time during the previous year is 80 years or more, then they will become a super senior citizen. For them, the first two slabs are gone. Because for them, the basic exemption limit is 5 lakhs. How much? 5 lakhs. So, will they pay any tax on their total income up to 5 lakhs? No. If the total income exceeds 5 lakhs, then from 5 to 10 lakh, they will pay 20%, and above 10 lakhs, they will pay 30%. But till 5 lakhs, they are not supposed to pay any tax. Getting my point? So, who is a senior citizen? Who is a super senior citizen? See here, I have written already. This is point number, this is point number B, and this is point number C. Any individual who is not getting covered in these two categories will be automatically covered in category A. For that individual, the limit will be 2,50,000 automatically. Getting my point? So, what if your age is 79 years? What will be your basic exemption limit? $79 years. What will be your basic exemption limit? 3 lakhs? Wrong. Because you did not see the entire question. In the question, it is written that you are a non-resident. Then it is not 3 lakhs, then it is 2,50,000. You will be covered in point number A. What if your age is 82 years? Read the question fully. Your age is 82 years. If you are a resident, then super senior citizen, then 5 lakhs. And if non-resident, then you are not a super senior citizen. You will be covered in point number A, 2,50,000. Getting my point? Okay. Now see, before I move ahead, I would like to give you some clarification. What is that clarification? Please look at the board properly, look at the screen properly. See, I'm talking about one individual. Okay. So, the name of this individual is Mr. Manohar. Okay. Name of this individual is Mr. Manohar. I have taken example. Mr. Manohar's age is 59 years. Now, yesterday only I have told you that what is our previous year. Come on, tell me. Whenever I say our previous year, for our examination, our previous year is 24-25. And what is our relevant assessment year? That is assessment year 25-26. Okay. Now, tell me, for us, the previous year is 24-25. So, Mr. Manohar is 59 years old. In the previous year, 24-25, his age is 59 years. Okay. Now, Mr. Manohar's birthday falls on 1st of April 2025. Right now, he is 59 years old. He will become 60 years old. He will celebrate his birthday on 1st April 2025. Now, can I say 1st April 2025 is the next previous year started? This previous year ended, next previous year started. So, what is the next previous year? 25 or 26. This is next previous year. So next previous year started, first day of the next previous year, Mr. Manohar will be celebrating his 60th birthday. So he will celebrate his 60th birth anniversary. Birth anniversary on 1st of April. My date of birth is 4th of October. My father's date of birth is 26th of July. My mother's date of birth is 25th of January. My sister's date of birth is 18th of September. Another sister's date of birth is 29th of August. We are family members from the same family. Are we born on the same day or different dates? Different dates. So is it possible that some individual might have born on 1st of April? So when he will celebrate his birthday, 1st of April. Every year I celebrate my birthday on 4th of October. Every year my father, his birthday we celebrate on 26th of July. So this Mr. Manohar, he celebrates his birthday every year on 1st April. So this time when 1st April 2025 will come, no, he will celebrate his 60th year, 60th birthday he will celebrate. Because he was born on 1st of April. So now first question you are supposed to answer. Manohar is 59 years old in the previous year 24-25. If he celebrates his 60th birthday on 1st of April 2025, so tell me, will he be considered as a senior citizen in previous year 24-25 or he will be considered as a senior citizen with effect from previous year 25-26 onwards? Come on, tell me. With effect from which previous year he will be treated as a senior citizen? Okay, Akshaya is saying 24-25. Kanu is saying 25-26. Okay, see, we are a few handful people sitting in the class and discussing about this thing. Okay, and we are confused that from which year Mr. Manohar should be treated as a senior citizen. Because see, if he is getting treatment of senior citizen from 24-25 onwards, he'll start getting the higher basic exemption limit from 24-25 onwards only. But what if he gets treated as a senior citizen from 25-26 onwards? He will get basic exemption limit of 2,50,000 this year, and from next year he'll start getting the higher basic exemption limit of 3 lakhs. So there was a confusion that in case of such type of individuals whose birthday falls on 1st April, okay, and that particular assessee, for example, in previous year 24-25 is 59 years old and he is going to celebrate his 60th birthday on the 1st April 2025, which falls on the next previous year. Will he be treated as a senior citizen in this year only or from next year onwards? This was the confusion. Many assessing officers in the department were having the view that he should be treated as a senior citizen from the next year onwards because he is celebrating his 60th birthday in the next year. But many assessing officers in the income tax department were of the opinion that he should be treated as a senior citizen in this year itself because he has completed his 60 years in this year only on 31st March. One department, multiple officers having two views. Few officers saying, no, from next year he will be treated as senior citizen. Few officers saying, no, from this year only he will be treated as a senior citizen. Now tell me, is this confusion good or bad? Bad. Because same situation happens in Gujarat. Here the officers are saying that from next year you will start getting the higher basic exemption limit. And the same type of fellow in Tamil Nadu officers are giving him the benefit of doubt from this year only. Understanding or not? So this was a confusion. So who will clear the confusion if there is some confusion in the applicability of the provisions? Who will give the clarity to the department and its officer what to be done, what not to be done? CBDT. And to give that clarity, CBDT issues circular. So there is a circular on this issue. So I'm going to tell you that from which year he will be treated as a senior citizen. First, let me check your logic. For example, today is 1st April and I'm born today. Example. Today is 1st April and I'm born today itself. When I will complete 1 year? On next 1st April or 31st March I will complete 1 year? Tell me. 31st March only, no? On the 1st April, I will enter in the 2nd year of my life. I will celebrate the completion of my 1st year on 1st April, but on the 1st of April, which is coming next, I will enter the 2nd year of my life. And the 2nd year will get completed on 31st March. And the next 1st April, I will enter in the 3rd year of my life. But I will be celebrating my 2nd birthday only. 2nd birthday got completed. 2nd year of my life got completed on 31st March, which I will be celebrating on the 1st April. But on that 1st April, I have already entered in the 3rd year of my life. By completing 2, I am entering into the 3rd year. Then on 31st, I will complete 3. And next 1st April, I have already entered into the 4th year of my life. But after completing the 3rd year, I will enter into the 4th. No? Apply this logic over here. 59 years in this year. 60 years completed as on 31st March only. Hello? 60 years completed as on 31st March of previous year 24-25 itself. After completing 60, I will enter in the 61st year on 1st April. But still I will be celebrating 60th birthday only. I will be celebrating the completion of 60 years on 1st April. But that does not mean that I am completing 60 on 1st April. That means I have completed 60 on 31st March itself. That is the reason we celebrate the birthday on 12 AM night. Ayo. After completing, we moved to the next year. Getting my point? So tell me, with this logic, don't you think that the assessee has completed, Mr. Manohar has completed the 60 years age as on 31st March 2024-25 only? At any time during the previous year, even for a single day, your age is 60. You are treated as a senior citizen for the full year. So are you a senior citizen in 24-25? The answer is yes. So you will start getting the higher basic exemption limit from 24-25 itself, which will now continue in the subsequent years also. You start getting the higher basic exemption limit from 24-25 itself, because you have completed the 60 years mark on 31st March itself. Although you are celebrating your birthday in the next previous year. Getting my point? The same logic applies when you have an assessee whose age is what? 79 years. Same logic you are supposed to apply that time. When he will become a super senior citizen? 1st April or 31st March itself? 31st March itself. So with effect from this year only, he'll start getting the higher basic exemption limit of 5 lakhs. Getting my point? So this was the CBDT circular. You are supposed to remember, will you? And just imagine if this kind of adjustment is given in the question. Now the moment you will see it, no, you will recollect. Sir gave the example of Mr. Manohar. Getting my point? Okay. Now see, this is the same thing which I have written in this note. I want all of you to read this note properly. Read this note. birthday falls on 1st April of the next previous year shall be treated as having attained the age of 60 or 80, as the case may be, on 31st March of the current previous year itself and not in the next previous year. He said that he has attained the age of 60 or 80 in this year only and not the next year when he is going to celebrate the 60 or 80 years. Yes or no? Accordingly, the higher basic exemption limit of 3 lakhs or 5 lakhs shall be available from next year onwards or from this current previous year itself. Current previous year itself. Getting my point? Now, please pay attention what I want to tell you here. Very important discussion. Very, very, very important discussion. Pay attention. See, when you compute your total income now, on the special incomes, you apply what? Special rates. And then you get a tax amount. And on the balanced total income, you apply what? Slab rates. And these slab rates are known as normal rates. Right now, if you are individual, HUF, AOP and BOI, or you are AJP, then on your balanced total income, you are supposed to apply the normal slab rates, which I have just shown. Yes or no? But wait, these normal slab rates are a little bit higher. Do you want some concession in tax rates? Would you like to pay tax at lower rates? So, there are alternate rates which are given in section 115 BAC, which are known as concessional slab rates. So, being an individual HUF, AOP, BOI or AJP, on this balanced total income, instead of applying the slab rates, normal slab rates, which we just now checked, don't apply this, you can apply 115 BSc rates also. And the 115 BSc rates, as compared to the normal slab rates, are beneficial. Because up to 3 lakhs, nobody is liable to pay tax. 3 lakh rupees basic exemption limit. Then 3 to 7, then 7 to 10, then 10 to 12, 12 to 15, and 5% rate will increase. Getting my point? So, the tax rates which are given in 115 BSc are comparatively lower as compared to the normal slab rates which we just now checked. So, would you wish to pay tax on your total income at higher normal rates or lower concessional rates as per 115 BSc? What would you like to do? Would you like to pay higher rates of tax or you would like to pay tax at concessional rates? Concessional rates, obviously, sir. Because if I apply the concessional rates of tax, my tax liability will reduce and I will pay less tax. No, sir. Understand this thing. This 115 BSc earlier used to be optional for all. That this is optional. And this was treated as default. So, by default, normal tax rates are applicable, but you have an option to apply 115 BSc. Getting my point? But wait, this 115 BSc rates are no more optional, they are now default. They are now default. So, by default, you are going to pay tax as per this rate, concessional rates. But if you don't want to pay tax as per concessional rates of 115 BSc, you are supposed to come out of the default tax scheme. Now, this is treated as a default tax scheme. Come out of the default tax scheme, shift out, opt out, only then you are going to apply the slab rates, normal slab rates. So, for everyone Now this concessional slab rate will be default. Individual, HUF, AOP, BY, AJP, for all of you, you all are supposed to pay tax at normal concessional rates only. Because this is what default. Okay, you don't want to pay tax as per concessional rates? No problem, shift out and pay tax as per normal slab rates. Sir, who is going to shift out? Everyone will stay in the default only, no sir? Because default rates, 115 BSE rates are very less as compared to the normal slab rates. So sir, nobody will opt out. You won't believe, majority of the people opt out only. Why? Because the government is giving you benefit in tax rates. Just imagine if the government is giving from one hand, don't you think it will take away many things from the second hand? Giving you benefit in tax rates, so they are going to take away many benefits from you in the form of disallowance of exemptions, deductions, etc. See, there are many exemptions and deductions which you get in the Income Tax Act. After claiming those deductions and exemptions, your total income is calculated, which happens to be a very small amount. Because while calculating your total income, you have taken all these deductions and exemptions, resulting in your total income to be a less amount. And on that total income, if you apply the normal tax rates, okay, anyways, your tax liability is going to come less only. But if you want that 115 BSE rate should be applied, concessional rates will be applied on the condition that there are many exemptions, many deductions which are heavy. We will not allow you those exemptions and deductions. So we will take away exemptions and deductions from you. So while computing your total income, what did I say? While computing your total income, there are certain exemptions and deductions whose list is given in 115 BSE only. Those will be snatched away from you. We will not allow you these exemptions and deductions. Compute your total income without taking these exemptions and deductions. Don't you think? In that case, your total income will be very high. And on that, even if the concessional slab rates are applied, at the end of the day, your final tax liability will be higher only. So earlier, no option was given to apply this, but nobody was taking that option because the government was taking away exemptions and deduction, resulting into a higher total income, and higher total income, even if the rates are concessional, still we are going to pay more tax. So why to take that option only? Don't take that option. So earlier it used to be an optional tax scheme. This year onwards, it has been made default. You want or no, from this year onwards, this is a default only. By default, you are in 115 BSE. By default, these exemptions and deductions will not be given. And without taking these exemptions and deductions, your total income will be calculated. Out of your total income, special income is taxable at special rate, but normal incomes will be taxable. The balance total income will be by default taxable at 115 BSE rates. If you don't want to do it, you want to claim exemptions and deductions, you want to pay tax as per normal rates, shift out. And when you shift out of 115 BSE, then you go to normal tax rates. Now that has become optional. But in order to take that normal tax rates, claim the exemptions and deductions while computing your total income, you will have to tell the government that, okay, government, I don't want to stay in 115 BSE. I want to come out. But if you fail to do it, this is your default. Now, sir, which exemptions or which deductions are taken away? And how much will be the tax rates? What will happen? See, if I try to tell you all these things right now, no, you'll not be able to digest those things, because till the time you don't know, don't learn the other chapters with me, no. While doing those chapters only, itself in the chapter only, there are certain exemptions and deductions which we are going to study. And we have just started, learning the income tax. And upfront only, how will you know that which exemptions are there, which deductions are there? So it is pointless to discuss about those things right now. Then why are you discussing here, sir? Just to make you all aware that, okay, this type of tax rates are also there in the Income Tax Act. So whenever in future, in my subsequent lectures, if I talk about 115 BSE, you are supposed to be, a little bit cautious that, okay, there are two tax schemes now. One is a default tax scheme of 115 BSE and one is normal tax scheme. Okay. So in the default tax scheme, these deductions and exemptions are not available and the tax rates are concessional. And under the normal tax scheme, I will have to shift out from the default tax scheme. Under the normal tax scheme, what is happening? I am going to get all the exemptions and deductions which are available under the Income Tax Act, but the rate of taxes will be applicable to me will be the normal slab rates which we have learned in the first lecture itself, first chapter itself. Now, whenever I will be teaching you any chapter, in that chapter only I will tell you that, see, if you are following 115 BSE, in this chapter these deductions are given, but when you follow 115 BSE, from this chapter you are not going to take these deductions. From this chapter, in this chapter we are learning these exemptions, you will not get these exemptions. So while learning the chapter one by one, we'll come to know, okay, under this chapter, if our calculations are made in this head, then no, this deduction will not be available, this exemption will not be available. If we follow 115 BSE, in this chapter, we are not supposed to take these deductions, these exemption. But what if we are not following 115 BSE, we are shifting out, then we are going to get these deductions and exemptions. Getting my point? But that we will learn one by one, chapter wise. And when we will complete all the chapters and we'll start solving the questions on total income, that time my final discussion about 115 BSE will happen with you. And that time you will say that, sir, you made it a piece of cake for us. Now we find it very easy to understand 115 BSE. That time you will yourself tell me that, sir, now 115 BSE, we are not afraid of it. Let it come to us. We'll face it. But right now I'm not going to talk anything about 115 BSE. Whatever calculations we are going to make, we will always assume in our all the calculations that we have shifted out of 115 BSE. We are in the normal tax scheme. We will apply the normal tax rates which we have studied so far. Getting my point? But there is 115 BSE also. There are concessional tax rates also that we are going to see later on. Okay. Now please read this note. Please read this note. This entire note. The above normal slab rates are optional tax rates which are applicable only when the assessee has shifted out of the default tax regime under section 115 BSE. If the assessee does not shift out of the default tax regime under section 115 BSE, then in that case the total income of the assessee shall be computed without giving effect to certain specified deductions and exemptions, and the rates of tax applicable on such total income shall be concessional slab rates given under section 115 BSE. Separate chapter on 115 BSE we are supposed to do, but at the time of total income calculation, right? No. So till that time, please remember this thing. That's it. Okay. Now let's move ahead. First of all, tell me what we have done. What we have done? We have computed our total income. Okay. So this is my total income. From this total income, special incomes taxable at special rates, I will get tax. This is a tax on my special incomes. There is no problem here. The special incomes are, very good. Whether you follow 115 BSE or you don't follow 115 BSE, this is going to remain constant. There is no change here. Whatever change will take place here in the second part. See, if you have claimed all the available exemptions and deductions while calculating your total income, while calculating this total income, you have claimed all the exemptions and deductions. Come on, tell me. Have you followed 115 BSE or you have shifted out? You have shifted out. That means on the balanced total income, you will apply which rates? Normal rates, not 115 BSE. But if while calculating this total income, certain exemptions and deductions which will not be allowed given in 115 BSE, you have not taken those exemptions and deductions and calculated this total income, meaning that you are staying in the default tax regime. That means now on the balanced total income, what rates you will apply? Normal rates? No, now you will apply 115 BSE rates. Getting my point? But right now we are assuming that we have claimed all the available exemptions and deductions and we have calculated this total income. So from this total income, whatever balanced total income will be there, on that balanced total income, will I apply 115 BSE rates or normal slab rates? Normal, optional slab rates, yes or no? So now I will apply normal rates which are not 115 BSE rates, yes or no? I will apply these rates. Now after applying these rates, I will get what? Tax. Now this tax plus this tax, I will add both the taxes, friends. What I will get now? I will get a tax on total income. What I'll get? I'll get tax on total income. Now whatever tax I have got on total income, on this tax, either the surcharge will be added or rebate will be allowed. Yes or no? Please pay attention. If I have to add a surcharge, so surcharge will be at the rate of 10% of this amount. If my total income is more than 50 lakhs, but up to 1 crore. So the rate of surcharge, this 10% depends on the amount of total income. So I will have to check the amount of total income. Is my total income more than 50? Total means special as well as normal, both the incomes taken together. Yes or no? I'm talking about the total income figure. If my total income is more than 50 lakhs, but it is up to 1 crores, then on my special tax also I have to give 10%. And on my normal tax also I have to give 10%. That means on both the taxes I have to pay 10%. Why to do 10% twice? I will add both of them and on the entire tax I will pay 10% surcharge. Hello sir? Are you all awake? Understanding? Listening? No? Understanding also? Or only listening? Understanding also? No? Very good. So 10% on the special tax also and 10% on the normal tax also, both taken together, apply 10%, no, but do it only if your total income is more than 50 lakhs. But it should be up to 1 crore. Sir, what if my total income, meaning sir, this figure is more than 1 crore, sir? Then the rate of surcharge will be, it will be 15%. How much? 15. Now your surcharge rate will increase. It will not remain 10%. Now whatever tax you have calculated on that entire tax, you are supposed to pay now 15% of surcharge. But that 15% will be applicable if your total income is more than 1 crore, but it should not be more than 2 crore, up to 2 crores. Sir, my total income is more than 2 crores now, sir. Then your surcharge rate will be, your surcharge rate will not be 15%. Now your surcharge rate will increase to 25%. How much, sir? 25%. Sir, what if my total income exceeds 5 crores? See, if the total income exceeds 2 crores, the rate will be 25%. But your total income should not exceed 5 crores. But if your total income, if this figure, friends, if this figure total income exceeds 5 crores, no, then your surcharge rate will also exceed and it will become how much? 37%. Just imagine, the more you will earn, the more you will be looted by the government. It is not looting. It is extracting more tax because you have the capacity to pay more tax. Are we taking taxes from you knowing that you are poor? No. You are earning more. So it should be your responsibility to pay some more taxes to the government, which we are taking in the form of what? Surcharge. And we are not applying this 37% on your amount of total income. We are applying this 37% on the amount of your tax only. Getting my point? Now wait here. Please pay attention. See, if your total income is up to 50 lakhs. So on your total income, will you calculate special tax? Yes. Will you calculate normal tax? Tell me yes or no. This is your special tax, this is your normal tax. Okay. Will you apply any surcharge on special tax? Will you apply any surcharge on normal tax? The answer is no. You just pay tax, no need to pay surcharge. Why? Because your total income is only 50 lakhs. It does not exceed 50 lakhs. So if the total income is up to 50 lakhs, on special as well as normal, no tax will be liable for surcharge. Will you remember this? Now what if your total income is more than 50 lakhs, but it is up to 1 crores. On this tax plus on this tax, on the total tax, you are supposed to apply 10% surcharge, yes or no? Either you apply 10% here, 10% here, then also the amount will be same. Rather than doing it, do one thing, no. Add both the taxes, on the entire tax apply 10% at once, no? Hello? Kanu, are you there? Sure, no? Okay. Pay attention now, pay attention. Sir, what if it is more than 1 crore but up to 2 crores? On this also, you are supposed to pay 15. So add both of them and apply what? Apply 15%. Any problem here? No. Now there will be problem. Wait. If your total income is more than 2 crores, but it is not more than 5 crores, then the rate of surcharge becomes 25%. Yes or no? Now, if you apply this 25% straight away on this total, no, your answer will be wrong. Why wrong? I will tell you. Wait. I will tell you. In your special tax, you must have calculated tax on short-term capital gain, which is given under section 111A. In your special tax, you must have calculated the tax on long-term capital gain covered under section 112A, as well as the long-term capital gain under section 112, as well as in your normal tax. Out of this normal tax, you would have calculated tax on dividend income. Pay attention now, pay attention. Very important discussion I am going to do now. If you will understand it, no, later on it will not put you in trouble. Later on also the same point will come. I am trying my best to make you all understand right now only. But right now, pay attention. In your special tax, on all the special incomes you have calculated your tax. But out of those special incomes, special tax, there will be some tax which you have calculated on these incomes. Because all these incomes are special incomes, taxable at special rates. So if you had these incomes in your total income, you have definitely calculated tax on these incomes and shown that tax in special tax. Understanding? You might have earned dividend income also. By the way, dividend income is not a special income, that is a normal income covered with all other normal incomes taxable at normal rates. So on the dividend income as well as other incomes, you have calculated the normal tax. That means in the normal tax, you have calculated the tax on dividend also. Yes or no? Tax on other normal incomes plus tax on dividend income. Yes or no? Now, if I present it this way, your special taxes includes those taxes which you have paid on short-term gain 111A, long-term gain 112A and long-term gain 112. And your normal tax might include tax on your dividend income also. So do one thing, from your special taxes, reduce the tax on STCG 111A, LTCG 112A, LTCG 112, and from your normal tax, reduce normal tax on dividend income. Can I say balance special tax? Can I say balance normal tax? If your total income is more than 2 crores, how much rate of surcharge will be applicable? 25%. They are saying that 25% as well as 37% surcharge rate is very high. 25% and 37% surcharge rate are higher rates of surcharge. We will not charge that surcharge rate on the incomes which are usually taxable at concessional rates. Just imagine these incomes, the tax rates are said that they are concessional rates of tax. And on the concessional rates of tax, you are applying on some income and you are calculating that income tax. That is a concessional tax. On that concessional tax, it will be bad to apply higher rates of surcharge. Getting my point? So whenever you calculate the tax, wait, your tax on total income, this entire tax, come on, think. Will this tax include taxes on special incomes? Will this tax include taxes on your normal incomes? All the taxes will be here. So on this entire tax, I will not apply 25%. Out of this tax, there is some tax which is on short-term gain 111A income, long-term gain 112A, long-term gain 112 income, and dividend income. These 4 incomes I have also earned during the previous year, and on those 4 incomes also the tax is calculated and that tax is included in this tax. Please separate this tax. On the tax on these 4 incomes, higher rate of surcharge is not applicable. Whatever balance tax remains, no, after eliminating tax on these 4 incomes, on the balance tax only you are supposed to pay higher rate of surcharge, 25% or 37% as the case may be. But that too only if after eliminating these incomes from your total income should be, remaining total income should also be more than 2 crores or 5 crores. Now wait. In your total tax, have you calculated tax on 4 incomes? You have to ask yourself that in my total income, sorry, in my tax on total income, in my entire tax liability, have I calculated tax on short-term capital gain 111A? Have I calculated tax on long-term capital gain 112? Have I calculated the tax on long-term capital gain 112A? Have I calculated the tax on dividend income? If the answer is yes, so from your this tax, whatever tax you have calculated on these four incomes, no, separate that. On that, maximum rate of surcharge is 15%. Higher rate of surcharge is not applicable on these four taxes. Now, whatever balance tax remains, on that you apply 25% or 37%, but that will be applicable only if after eliminating these four incomes out of your total income should also be more than 2 crores or 5 crores. Now pay attention, I will make some examples. You are supposed to give me the answers, okay? Everyone. Understanding, no? Listening? Only listening? Or listening and understanding both? Both. Only listening not sufficient. Listening, processing, understanding. Okay? Come on, tell me one thing. Wait, huh? Yes. For example, my total income is 4 crores 80 lakhs. Can I say my total 4 crore 80 lakhs? No, one more zero. Yes. If my total income is 4 crores 80 lakhs, can I say my total income is more than 2 crores? Now, whatever tax I will calculate, whatever tax I will calculate on this income, on that tax I am supposed to pay 25% surcharge. Right? If nothing is given about those four incomes, so definitely this is my normal income on which I will apply normal rates, I will pay normal tax. On that normal tax, I will apply 25%. Because those four incomes are not given in the total income. But wait. They are saying that in your total income of 4 crore 80 lakhs, there is short-term capital gain under section 111A. And that amount is 1 crore 80 lakhs. Possible, not possible? Possible. And the balance total income liable to be taxed at normal tax rates is how much? 3 crores. Yes or no? Now what you will do? You will calculate tax here on this income. Whatever may be the amount, I am not worried about the calculation of tax. I want to put this concept in your mind. Calculations and amounts you will automatically easily get. But learn this concept first. Concept if understood, no, calculations will become very easy. So whatever the short-term capital gain income is there, on this income, whatever rate will be applicable, that rate of tax you will apply and you will calculate the tax. This is the tax on your short-term capital gain. And on this balance total income, which is 3 crores, you will apply the normal rates or 115 BSE rates as the case may be. Okay, no? But right now we are not talking about 115 BSE. So we are talking about normal rates. Normal rates I will apply. I will calculate the tax over here. Done? So tell me, this tax plus this tax, both of the taxes taken together, you will get a tax on a total income. Total. Now on this tax, you will be applying surcharge at the rate of 25%, meaning that you have applied surcharge on this also 25% and this also you have applied 25%. Your answer will be wrong. Sir, why you are applying 25%? Because my total income is more than 2 crores. So whatever tax I will pay, I will have to pay 25% surcharge also. But I have told you one more thing, that if in your tax, there is a tax on short-term gain 111A, tax on long-term gain 112A, tax on long-term gain 112, and tax on dividend income, on that tax you are not supposed to apply 25%. in this entire tax, if you apply 25%, meaning that you have applied 25% on this tax also, which is wrong. On this, how much will be maximum? On this 15% you can apply surcharge. So now instead of calculating surcharge on the total tax, now you'll have to calculate the surcharge separately. On this income separately, and on the balance total income calculate separately. But on this income, the rate of surcharge can never be, on this income, the rate of surcharge can never be more than 15%, even if the total income is more than 2 crores. On this tax, higher rate of surcharge is not applicable. Neither 25% nor 37%. Maximum rate of surcharge here can be 15%. Yes or no? But after eliminating this income from your total income, is your total income still more than 2 crores? Now on this tax, you will apply 25%. Got it? Yes or no? Now tax plus 15% surcharge, tax plus 25% of surcharge, add both of them, you will get tax on total income including surcharge. That's it. Sure? Now let me twist the thing a little bit. Now I will ask you, I will see whether you are able to answer or not. Sir. Total income remaining same. Now what changes I am making? This becomes 3 crores and this becomes 1 crore 80 lakhs. I have just shuffled. Is it possible? Now tell me, on this tax, maximum surcharge. See, even if my total income is more than 2 crores, remember, whatever tax I will pay on these type of 4 incomes, yes or no? Here it could have been long-term capital gain also, 112. I would have done the same thing. Understanding? Here it would have been the dividend income, tax on the dividend income also. I would have done the same thing. Calculations we will learn later on. Don't worry about that. But right now, focus on this tax. The higher rate of surcharge cannot come. It cannot be more than 15%. Understood, no? Even if it is itself more than 2 crores. See, itself it is more than 2 crores. These incomes are taxed at concessional rates. Okay. Share market transactions are resulting into these kind of incomes. Whatever incomes I am talking, no, usually those results into share market transactions. Okay, dividend coming from shares, 111A, short-term gain on transfer of shares, listed shares, 112A, long-term gain on transfer of listed shares. All those things you'll learn later on. And these tax rates have changed also. So till the time I am not going to tell you those tax rates and everything, these things will be a very premature discussion. But still I am doing it right now, because if I do these things later on, no, at least you will have some conceptual understanding. That time my efforts will be half. Yes or no? And you will also understand quickly. Now pay attention. This 15% I will apply here. Whatever this income should be. Tell me, my total income more than 2 crores. Am I liable to pay 25% surcharge? Yes. But on that, I will pay that 25% surcharge on all the taxes except this tax. Will I pay 25% on this tax? No. Why? Because from 480, when you reduce this 3 crores, now the remaining income itself is less than what? 2 crores. So on this also, now you will apply 15%. 15 here also, 15 here also. But last time we applied 25% here. Why? You know? Because after eliminating short-term capital gain, still my balance income remaining was more than 2 crores. Got it? Sure. Now pay attention. 2 crore 80 lakhs. 2 crore 80 lakhs. Is my total income more than 2 crores? Yes. And in this long-term capital gain under section 112 is there. And the amount is 2 crore 50 lakhs. And what is the balance total income? Balance total income is only 30 lakhs. Sure or no? First question. Is surcharge applicable? Yes means Y. No means N. Give me the answer. Is surcharge applicable? Come on, give me the answer. Akshaya. Surcharge applicable? How did you come to know surcharge applicable? Sir, you only said no. If total income more than 50, surcharge applicable at 10%, but it should be less than equal to 1 crore. What if it is more than 1 crore? Then also surcharge applicable. What if it is more than 2 crore? Then surcharge 100% applicable. Because your total income is more than 2 crores. Surcharge 100% applicable. But the rate of surcharge will be 25%. Hello? Surcharge applicable? Yes. Because my total income is more than 2 crores. So you cannot deny that there is no surcharge. Surcharge is there. Because your total income is more than 2 crores. Now out of this, can I say long-term capital gain 112, you will calculate tax over here. And on this tax, you will not pay tax. You will not pay surcharge more than 15%. You will apply 15% over here. But tell me, on the balance total income, you will calculate tax. On this tax, will you apply any surcharge? Because after eliminating long-term gain, see, balance total income is less than 50 lakhs. And up to 50 lakhs, there is no surcharge. If you will speak like this, I will come in the exam and I will give you tight slap then and there only in the exam hall. Remember one thing, the tax is calculated here. Just thank us that we are not taking 25% from you. Bloody, your total income is more than 2 crores. You should be paying 25% surcharge. Just thank us that we are not taking 25% from you. But that does not give you a right to say that after eliminating long-term gain, whatever income remains, that is less than 50. So I will not pay any surcharge. Bloody, you have to pay surcharge here also. But the rate of surcharge cannot be more than 15%. No. You cannot say, no, I will pay 10%. No. Just imagine your total income is more than 2 crores. Are we asking 50% from 25% from you? No. But at least pay 15% or no. So here also 15% and here also 15%. Because after eliminating this income, whatever income remains that does not cross 2 crores. After eliminating long-term gain, whatever income remains, does this income crosses 2 crores? No. So 25% cannot be charged here, but at least you will have to give 15% here also. Just to thank us that we are not charging 25%. Getting my point? So these type of questions are there in your ICI study mat. Many questions are there, many questions. But right now, don't touch those questions. Till the time we are not finishing capital gains chapter, no, till the time you are not touching these kind of questions. And once we finish that, no, then I will tell you that now we are going to do those questions. Understanding? Only then it will be a matured discussion at that time. The number crunching you will do properly. Logic I have told you right now. From your total tax, there are 4 taxes you are supposed to separate. One, tax on your short-term gain 111A, tax on your long-term gain 112A, tax on your long-term gain 112, and tax on your dividend income. On these four taxes, the higher rate of surcharge 25% and 37% are not applicable. Even if your total income is more than 2 crores, even if your total income is more than 5 crores, these taxes, higher rate of surcharge 25% and 37% not applicable, apply maximum 15%. And after eliminating these incomes from your total income, if the balance total income still remains more than 2 crores or 5 crores, then only on the tax of that total income you will apply 25% or 37%. Getting my point? Okay. So this was one discussion which I wanted to do, very important discussion. Okay. See, these are the rates of surcharge. And whatever rates I have discussed right now, no, it is applicable individual, HUF, AOPBY and AJP, because we are discussing the tax rates of individual, HUF, AOPBY and AJP. So whatever tax rates we are discussing, if this is for 4 persons, so the rates which we are discussing, surcharge rates, are also applicable for those 4 persons. Okay. So pay attention. This. Now, I will tell you one thing. Are you liable to pay tax at normal rates? Yes. So these are the surcharge rates. But if you don't take certain deductions and exemptions which are given in 115 BSc, if you remain in 115 BSc, you want to pay tax at concessional rates. Yes or no? So your tax will be concessional rates, special tax will be special rates, total tax, hello, on that total tax, the same rates of surcharge are applicable there also. But wait, here the highest surcharge rate is 37%, there the highest surcharge rate is 25%. So if your total income is more than 2 crores, then 25%, and your total income under the default scheme, when you will calculate your total income, if that total income is more than 5 crores also, no, then also the rate of surcharge will be 25%. 37% does not exist over there. Getting my point? So these rates will be compared. What I will be doing, normal rates are these are the concessional slab rates. Under the normal scheme, this is the surcharge rates, and under the 115 BSc, this is the surcharge rate. Okay, then there will be a concept of higher rate of surcharge 25% and 37% not applicable on taxes on 4 incomes. That same concept is there also. If you calculate your tax under default scheme or normal scheme, will not make any difference. Higher rate of surcharge 25% or 37% will not be applied on taxes on these 4 incomes. And if you are under the default scheme, no, there also the highest rate of surcharge is 25%, will not be applicable on taxes on these 4 incomes there also. Same thing, no change, only the tax rates are changed, only the surcharge rates are changed. There you are not supposed to calculate, you are not supposed to take any exemptions or deductions which are specified without calculate the total income. Apply a little bit different rates, apply a little bit different surcharge rate, but the conceptual things will remain same, no? Here they are saying that on 4 taxes, higher rate of surcharge is not applicable, 25% or 37%. There, on those 4 taxes, there also under 115 BSc also, those 4 taxes, higher rate of surcharge, which is 25%, will not be applicable. Getting my point, everyone? Sure? Now please read this note. Higher rates of surcharge 25 and 37 are not applicable on the amount of tax on STCG 111A, LTCG 112, LTCG 112A or dividend income discussed later on under the capital gains chapter. I told you that we'll be doing capital gains chapter. We'll have a huge clarity about these things. But right now it is their basic discussion I have done with you. Okay? Now, please pay attention. Read this note. So these surcharge rate are to be applied when you apply normal slab rates, when you shift out of 115 BSc. But what if you remain under 115 BSc? The concessional slab rate will come, and that time the surcharge rate will little bit be different over there. Okay, that is what is written over here. If the assessee does not shift out of default tax regime, that means he follows 115 BSE, then the concessional tax rates given under 115 BSE are applicable, and the surcharge rates applicable along with the concessional tax rates are discussed later on with concessional tax rates, right? Okay. Now I will discuss concept of rebate under section 87A. So there is a concept called rebate. Wait up. See, individual, HUF, AOP and BOI, and there is AJP, right? Surcharge will be applicable only on individuals or all. On all, the surcharge will be applicable. So whether you are an individual, HUF, AOP, BOI, AJP, whoever you are, we don't worry. If your total income is more than 50 lakhs, surcharge will be applicable on all. That means you all will pay surcharge along with your tax. Yes or no? How much surcharge? Everyone knew this. So the rates of surcharge which we had discussed, no, those rates of surcharge were applicable for all these 4 persons. Done, na? Now, if you are individual who is a resident and whose total income does not exceed 5 lakhs, then on your total income, whatever tax you have calculated, special tax plus normal tax, both taxes taken together, whatever total tax you have calculated on your total income, which does not exceed 5 lakhs. Are you rich or poor? Poor. You are rich when your total income is more than 50 lakhs. And what if your total income does not exceed 5 lakh also? You're poor, no? So poor fellow paying tax. Come here. We are giving you some discount. Don't pay this much tax. From this tax, we are giving you some rebate. So this tax will be your special tax as well as normal tax. Both the taxes taken together, yes or no? In your total income, special rate, tax, normal income, normal rate, tax, total tax I am talking about, tax on total income. From that tax on total income, we are going to give you what? Rebate under section 87A. Who will get the rebate? All the 4 persons will get the rebate, or only individuals? Only individuals. All the individuals will get? No, only resident individuals. Sir, all the resident individuals will get? No, only those resident individuals whose total income is up to 5 lakhs. So 3 conditions. You should be an individual. You should be a resident. Your total income should not be more than 5 lakhs. If all the 3 conditions are fulfilled, on your total income, whatever tax you have calculated, special tax, normal tax, entire tax, you can claim rebate of that tax. How much tax? How much rebate? Rebate amount will be either 100% of this tax. So whatever tax you have calculated, tax on total income, friends, this entire tax you can claim as rebate, or maximum 12,500. So if the tax calculated by you is 10,000, so 10,000 or 12,500, whichever is lower, 10,000 will be your rebate. So out of 10,000, take the rebate of 10,000. How much tax you will pay? 0. What if your tax calculated is 11,500? 11,500 or 12,500, whichever is lower, 11,500, you will get rebate. So the tax was 11,500, rebate is also 11,500, no tax is supposed to be paid. But what if your tax calculated special incomes tax plus normal incomes tax both the taxes taken together, if the total tax amounts to 15,000. How much? 15,000. So will you get 15,000 rebate? Maximum rebate which you can claim cannot be more than 12,500. So either 15,000 or 12,500, whichever is lower, 12,500, claim the rebate of 12,500. So what was your tax? 15,000. Out of that, take a rebate of 12,500. Whatever balance remains, 2,500, that you pay. But on that, you will apply 4% cess. Understood? No? Sure. Now pay attention. Pay attention. This is a resident, individual, total income less than or equal to 5 lakh. All the three conditions are fulfilled. Now on his total income, tax is calculated, tax on total income. If this tax includes tax on long-term capital gain under section 112A. So out of the tax, in this tax, if you have calculated tax on long-term capital gain under section 112A, separate it, you have to pay this tax. You cannot take this tax as a rebate. So whatever tax which you want to claim as rebate can be any tax but not this tax. This tax you have to pay. So in your total tax, if you have calculated this tax, separate it, you have to pay this entirely. But after eliminating this tax, whatever balance tax on total income which remains, this amount can be claimed as what? Rebate. So this amount includes all taxes. Your normal taxes are also there. Your winnings income tax also there. Your 111A short-term gain tax also there. Every type of tax can be covered here and can be claimed as rebate. But one tax cannot be claimed as rebate. And that tax is tax on long-term capital gain 112A. And logic you will get later on. Don't worry. Logic and everything. Sir, why this is not allowed as a rebate? Everything I'll tell you later on. But right now, first to focus. In your total tax, if you have calculated the tax, and in that total tax, you have calculated the tax on long-term gain 112A, and you have shown that tax also, no? Please, I request with folded hands, take this tax separately and pay this tax entirely. You will not get any rebate from this tax. But whatever balance tax remains, no, that balance tax other than tax on LTCG 112A, the balance tax only you can claim as rebate. But that too also maximum 12,500. So for example, your balance tax, your entire tax liability, here, if I say, okay, your tax on total income happened to be, example, let us take an example, it was 14,000. It was 14,000. Yes or no? And the tax on long-term capital gain was, example, it was 1,000 rupees. So in 14,000, you have calculated 1,000 and 1,000 is there in that 14,000. Yes or no? So first thing, you will separate this 1,000 from 14,000 because this 1,000 you have to pay. You cannot take it as a rebate. Not 1,000, let's take it 2,000 only 2,000. Yes or no? So this 2,000 you are supposed to pay. You cannot take the rebate of this 2,000. So out of 14, how much tax maximum you can claim as rebate? 12,000. Rebate can be available from this 12,000 only. Rebate you cannot take entire 14,000 because that 14,000 includes 2,000 rupees tax which was there on LTCG 112A. So do one thing, balance tax you will claim rebate under section 87A. Okay. How much will be the rebate? Either the entire tax or 12,500, whichever is lower. So entire tax was 12,000 which can be claimed as rebate, or 12,500 whichever is lower. So how much will be your rebate? 12,000. 12,000 minus 12,000 is how much? Nil. So are you supposed to pay any tax? Yes. Understood? How much was that? So I eliminated here and I again added here. eliminated so that I don't claim it as a rebate. But after claiming rebate, whatever tax remains, along with that tax, I have to compulsory pay this tax. Understanding? Eliminated. Why? Because I cannot claim it as a rebate. But once after claiming the rebate, whatever tax remains, along with that tax, I have to pay this tax, no? So I will again add it back. Getting my point? Sir, so how much is the total tax now which you are supposed to pay? After rebate it was nil, but you have to pay this 2000, no? So pay 2000, but with 4% cess. 2000 into 4% will be how much? 80 rupees. 2080 will be your gross tax liability. Got it? And if, for example, if there was no tax on LTCG, then entire 14,000 could have been claimed as rebate subject to maximum 12,500. Then in that case, my tax liability would have been 1,500. Add 4%. Done? 1,560 final amount. So this was the calculation of rebate. I hope you understood. Now wait. This is the calculation of rebate if you shift out of 115 BSc. That means you are under normal scheme. But what if you don't shift out, you remain in 115 BSc, then will you still get rebate? Yes. What will be the amount of rebate? How much rebate you will get? Understand? Those things we'll learn there when we'll be doing 115 BSc. Wait, even if your total income is more than 5 lakhs, no, still you will get rebate under 115 BSc. Because for 115 BSc, limit of rebate, total income for claim of rebate, limit of that total income is 7 lakhs. So if your total income is up to 7 lakhs, you get rebate over there. And the amount of rebate is also 25,000. And what if your total income was 5 lakh 4,000? Now tell me, if you are a resident individual and your total income is 5 lakh 4,000, will you get any rebate under the normal scheme? No. There, if your total income exceeds a little bit over 7 lakhs, no, still you will get rebate over there. So all those things are a little bit, little bit tricky. I cannot put you in that trouble right now. So when we'll be doing 115 BSc, that time you have already known this. And you are already matured by that time. And that time when I'll discuss all those things with you, you'll learn them better. You'll remember them better. So right now, 115 BSc tax rates, we are not discussing. Surcharge rate under 115 BSc, we are not discussing. Rebate, when you follow 115 BSc, we are not, but these things will also be discussed. Right now, whatever discussion we are doing from the point of view that assessee has shifted out of 115 BSc. He is not following default tax regime. He is following what? He is following the normal tax regime. So under the normal tax regime, what are the tax rates? Slab rates. Up to 250, no tax. 250 to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Above, above 10 lakh, 30%. And if he is a senior citizen, basic exemption limit 3 lakhs. If he is a super senior citizen, basic exemption limit 5 lakhs. Rate of surcharge is 10%, 15%, 25% and 37%. If the total income is more than 50 lakhs, more than 1 crore, more than 2 crores and more than 5 crores, the higher rates of surcharge of 25% and 37% will not be applicable on 4 taxes. Tax on STCG 111A, tax on LTCG 112A, tax on LTCG 112, tax on dividend income. On these 4 taxes, higher rates of surcharge will not be applicable. Will you get any rebate? The answer is yes. The assessee is going to get the rebate, but the rebate is not available to all the 4%. It will be available only to individuals who are resident, whose total income does not exceed 5 lakhs. So whatever tax he has calculated, the entire tax he can claim as rebate up to the maximum of 12,500. But out of that tax, the tax on long-term capital gain 112A cannot be claimed as rebate. That is supposed to be paid fully. After eliminating that tax, whatever tax remains can be claimed as what? Rebate to the extent of maximum 12,500. This is what we have discussed so far. And one CBDT circular also I have discussed with you. I hope you understood that circular also. Everyone? Sure. So this was the most difficult part which we have completed. Now very easy part will come. See, what is the easy part? Concept of rebate I have already told you. Please read this part once. And once you are done with reading, let me know. I will move ahead. The limit will change. It will be 7 lakh instead of 5 lakhs. And the maximum rebate can be claimed up to 25,000 instead of 12,500. That we are going to study in 115 BSc also. And here if your total income exceeds 5 lakhs by a very small margin, then you will stop getting the rebate. But there under 115 BSc, if your total income exceeds slightly over 7 lakh, still you will get the rebate over there. How much you will get, how you will get, what rebate you will get, you will learn there. Okay. Total income crosses 5 lakh. No, your total income, are you an individual? Yes. Resident? Yes. Your total income should be 5 lakhs maximum or less than that. Only then you will get rebate. The moment your total income becomes 1 rupee higher than 5 lakhs, no, forget about rebate. You will not get any rebate. Understanding? But when you will go to 115 BSc, no, there the limit for total income is not 5 lakhs. The limit is 7 lakhs. Up to 7 lakhs you can get what? Rebate. And there sometimes it might also happen that your total income, even if it exceeds 7 lakhs, still you are eligible to get rebate over there, which is not possible here. Got it? You will entirely lose your 12,500. There you will not entirely lose 25,000, but you will lose something, but still you will be eligible to get rebate over there. Got it? Now, read this part. Done? Okay. Now, partnership firm, normal total income taxable at normal rate, and the normal rate is not slab, it is a flat rate of 30%. That's it, gone. The rate of tax for partnership firm over. Partnership firm including LLP. LLP is also the same rate is there. And even the local authorities, the rate of tax is same. So 2 persons we have covered here. 4 persons above, individual, HUF, AOP, BY and AJP. And 2 persons here. One is partnership firm including LLP and also the local authority. Their special income, they will also calculate total income, special income at special rate, but their normal total income will not be taxable at slab rates. For them, there is a flat rate of 30%. Entire total income, normal total income, entire normal total income taxable at 30%. No basic exemption limit. Basic exemption limit, etc. available to individuals and all, not to partnership firm. So if the partnership firm is earning 10 rupees of normal total income, they will have to pay 3 rupees of tax. If they are earning 100 rupees, they will pay 30 rupees of tax. If they are earning 1000, they will have to pay 300. Whatever total income they are earning, entire total income, normal total income, they will pay 30% tax. So their tax rates, normal tax rates are not given in slab. It is a flat rate. Hence, their normal tax is known as flat rate. But for individuals, HUF, AOP, BOI and AJP, the rates, normal tax rates are given in slabs. Hence, their normal rates are treated as slab rates. Getting my point? And if the total income, did I say special income? No. Did I say normal total income? No. I am saying total income. Total income includes both the incomes. Yes or no? If the total income of the firm or local authority happens to be more than 1 crore, then they are liable to pay surcharge also, and the rate of surcharge applicable to them is 12%. So on that entire tax which they are going to pay, along with that tax, they will pay 12% surcharge also. Understanding? Will there be any rebate given to them? If you talk about rebate or no, just imagine. Bloody, we don't give the rebate to HUF, AOP, BY, AJP, and we are talking about rebate here. No, there will be only surcharge. Other than individual, only surcharge will be there. No rebate. Rebate you will talk only if individual is the assessee. For everyone, either surcharge, with surcharge pay the tax, or without surcharge pay the tax. But there is no concept of rebate for any other assessee other than individual. Yes or no? And the surcharge rate is very easy over here. Whatever tax, special tax you have calculated, whatever normal tax you have calculated, entire tax 12% surcharge. Entire tax 12% of surcharge. Sir, higher rate of surcharge not applicable on 4 taxes, sir. You said, Acha, that was applicable only if you calculate taxes for individual HUF, AOP, BY and AJP, where there was higher rate of surcharge applicable. Here only one rate of surcharge is there, no, 12%, and that too also when a total income exceeds 1 crore. So entire tax, either special tax or normal tax, entire tax apply 12%, that's it. Got it? This is very easy. Now, if you come to cooperative societies, see, cooperative societies are also AOPs, but they are covered separately. All the AOPs are covered above. All the AOPs are covered above with individuals and HUFs and all. But one AOP which is a cooperative society, AOP which is a cooperative society, for them the tax rates are different. All the other AOPs, the tax rates are slab rates, which we have already seen. But those AOPs which are cooperative societies, for them the tax rates are different. Up to 10,000 of their normal total income, they will pay 10%. If their normal total income exceeds 10,000, then 10,000 to 20,000 rupees of their total income, they will pay 20% tax. And their total income which exceeds 20,000, on that entire excess amount, they will pay 30%. So, for example, their total income is 5 lakh rupees. Normal total income I am talking. So, if there is a cooperative society and that cooperative society is earning normal total income, normal of rupees 5 lakhs, first 10,000, 10%, meaning 1,000 rupees. Then 10,000 to 20,000, meaning another 10,000 rupees, you are supposed to pay 20%. Now it will be how much? 2,000 rupees. And what is the total income over and about 20,000? Total income is 5 lakh. So how much is the total income over and above 20,000? It is 4,80,000. On that 4,80,000, you will apply 30%. 30% how much tax? Come on, tell me. 30% of 4,80,000. It is 14,000, 1,44,000, no? So it will be 1,44,000 here, it will be 2,000 here, and it will be 1,000 here. If the total income, normal total income is 5 lakhs. So out of this 5 lakh, on the first 10,000, no tax. Then 10,000 to 20,000, another 10,000. It will be 20%. And whatever total income which is in excess of 20,000, that is 4,80,000, on that you will apply 30%. Now add all of them. 1,47,000. That will be the tax. 1,000 plus 2,000 plus 1,44,000. 1,47,000 will be the tax over here. Will there be any surcharge? No. But if the total income of the cooperative society exceeds 1 crore, then there will be surcharge of 7%. But Only if its total income is up to 10 crores. If the total income of the cooperative societies exceed 10 crores also, no, then the rate of surcharge will become 12%. This is recently changed. And the same surcharge rate you will see for domestic companies also. So they are liable to pay what? Surcharge at the rate of 7% if their total income exceeds 1 crore but does not exceed 10 crores. But if their total income exceeds 10 crores, no, then they are liable to pay surcharge at the rate of what? 12% instead of 7%. Done? Now wait, this surcharge rate is applicable on all the total in all the taxes. Special tax, normal tax, all the taxes, yes or no? But these rates will be applicable only on normal total income. Special total income, special rates are there. Normal total income, this rate will be applicable. Special tax plus normal tax, both the taxes taken together, this surcharge rate will be applicable. Same logic here also. Yes or no? This 30% rate will be applicable on the normal total income. Special income taxable at special rate. Normal income taxable at a flat rate of 30%. Normal tax plus special tax, both taken together, total will be liable for surcharge. Surcharge will be on entire tax, 12%, but provided the total income is more than 1 crore. Yes or no? Now coming to companies. See, now if we talk about companies will be of two types. First, domestic companies, and second, foreign companies. So if we talk about foreign companies, the rate of tax for foreign companies, earlier it used to be 40%. Now from this year, this rate has been reduced. This is new amendment. The rate is 35%. So foreign company earning total income, special incomes will be taxable at special rates. But the normal total income will be taxable at a flat rate of 35%. Done. Surcharge will also be levied if the total income is more than 1 crores. But up to 10 crore, the rate of surcharge will remain 2% only. But if the total income exceeds 10 crores, then the surcharge rate will also increase. It will become 5%. Understanding? See, special income at special rate, normal incomes at flat rate of 35%. Both the taxes taken together, tax on total income. Now on this tax, apply what? 2% surcharge if the total income is more than how much? 1 crore. But if the total income is more than 10 crores, then on the entire tax, apply 5% of surcharge. That's it. The rate of tax for foreign companies done. Now, if we see, then for domestic companies, the rate of surcharge are little different, and the rate of tax on normal total income is a little different. For domestic companies, the rate of tax is 30%. Right? Wait, I'm telling you. Wait, please pay attention now. Special incomes will be taxable at special rates. But the normal total income for domestic companies will be taxable at a flat rate of 30%. Normal tax plus special tax, total tax. On that you will have to apply surcharge of 7% if the total income is more than 1 crore. But if the total income exceeds 10 crores also, no, then the rate of surcharge will become 12%. Then no. Wait, this is domestic company. But if you are a domestic company, during the previous year 24-25, the rate of tax applicable is how much? 30% on your normal total income. What is the tax rate applicable? 30%. But this 30% will be taken as 25%. You will not be charged at 30%. You will be charged at only 25%. If the turnover for the previous year 22-23 was 400 crores or less, then in this year your tax rate will not be 30%, it will be 25% only. There is no such change for foreign companies. Foreign companies, whatever may be the turnover in 22-23 will not make any difference. This year, foreign company will pay tax at the rate of 35% on their normal incomes. But domestic company paying tax on their normal incomes at 30%, right or no? Domestic company will be taxable at 25% only. If the turnover of this domestic company in the previous year 22-23 was 400 crores or less, then in this year the rate of tax will not be 30, it will be only 25%. Now pay attention. We'll have some discussion about this. Okay, pay attention. I'm making a small timeline for you. Okay, this is my previous year 24-25. What was the previous year prior to this? It was previous year 23-24. What was the previous year prior to this? Previous year 22-23. So if you are a domestic company, whatever total income you have earned in 24-25, on your special incomes you will be liable to pay at special rates. But whatever normal total income of 24-25. So in this year, whatever normal total income you are earning, no? On this normal total income, you were liable to pay tax at what rate? 30%, no? So they are saying, no, don't pay 30%, pay only 25%. But this 25% will be applicable only if your turnover in this year, no. Last year, no. Last to last year, meaning 22-23, if your turnover was less than equal to 400 crores, then only for this year your tax rate will be 25%. Sir, they could have taken the turnover for this year also, no? Forget about this year, at least last year they would have taken. Why they took the turnover of last to last year, sir? Just imagine, whatever tax rates which are applicable on normal total income are given in Finance Act. The tax rates which are given in the Finance Act, those tax rates only we are discussing, no? And tell me, the Finance Act relevant for us is Finance Act 2024? Hello? And Finance Act 2024 is coming from what? Budget. So usually budget comes on 1st of February. Right? No? So for example, if the budget came on 1st of February 2024, example I am saying, example, if budget came on 1st of February 2024 and it was an election year, so two budgets came, one before the election and second after the election. So let us talk about the budget which came prior to election, and that was on 1st of February 2024. In this budget, whatever rates which are going to apply for the next year will be given in this budget, will ultimately become the Finance Act. Hello, sir. Now just imagine, if the government tells you in this budget only, on 1st of February 2024 only, the government tells you that, okay, in the next year, your tax rate will be 25% if your next year's turnover is 400 crores or less. Tell me which company will allow their turnover to go beyond 400 crores. The turnover will be manipulated. So it will be very dangerous right now to tell the companies that for the next year, your rate of tax will be 25% if next year your turnover happens to be 400 crores or less. It will be very dangerous. Hence, turnover of 24-25? No. At least they could have taken the turnover of 23-24. Still, it will be dangerous. Because right now it is February month. In the February month, the budget is coming, and in this budget, we are telling that next year your next year your tax rate will be 25%. If this year, 23-24, your turnover happens to be 400 crores or less, still 2 months are remaining, February and March. In these 2 months, you will manipulate your turnover. Which turnover cannot be manipulated? The year which has already gone. And that year, my dear friends, was 20 to 23. This turnover you cannot manipulate now. Based on the turnover of 20 to 23, we are announcing on 1st February 24 that your tax rate for 24-25 will not be 30%, it will be 25%. That is logical. Akshaya, are you understanding? Sure? You go and ask this thing to any of your friends. That what is the tax rate applicable to companies, domestic companies? They will say 30%. But sometimes it is 25%, huh? But for that, we need to check the turnover of 20 to 23. You also know, na? Your friends will also know. But you have to ask them, why the turnover of 20 to 23? This logic which I gave you, no, they will not be knowing that. Check it once and then let me know. You will come to know that what you are getting from me. Understood? Sure. So wait, we have completed the tax rates, normal tax rates applicable to all the types of assessees. See, whenever any assessee is earning special incomes, no, any assessee earning special incomes, on that the tax rates are predefined. So if it is a company, it is a partnership firm, it is a individual, any type of person earning special incomes, on those special income, the tax rates are already predefined, apply those tax rates. But the balance part of total income is normal total income taxable at these rates which we have discussed just now. Individual HUF, AOP, BY and AJP. Slab rates will be applicable. But these slab rates are optional. If you fall in default tax regime and you don't opt out, then your concessional tax rates will be applicable. That we are going to see later on. Then what about a partnership firm, sir? Partnership firm including LLP as well as local authorities, sir. For them, there is no slab rate. Their rates are flat. Their rate is flat rate of 30%. So their normal total income will be taxable at flat rate of 30%. What about the tax rates for cooperative societies? Cooperative societies, slabs are given, but no basic exemption limit. First 10,000, 10%. 10,000 to 20,000, 20%. Any total income, normal total income over and above 20,000 will be taxable at 30%. What about a domestic company? Tax rate is 30%. But if the turnover of the domestic company during the previous year 22-23 was 400 crores or less, then for the domestic company this year the tax rate will not be 30%, it will be 25%. But for foreign companies, what is the tax rate? Earlier it used to be 40%. Now from this year onwards it is 35%. Yes or no? These are the tax rates which you are supposed to apply on the normal total income. Now normal total income, these rates, special incomes, special rates, special tax, both the taxes added together, you will get total tax on total income. On these taxes on total income, you will apply surcharge rate. Surcharge rate different for individual, HUF, AOP, BY, AJP. If the total income crosses 50 lakhs, then surcharge is applicable. 10%, 15%, 25% and 37%. 25% and 37% higher rate of surcharge not applicable on taxes on 4 incomes. That we have already discussed. Okay. Then what about the partnership firm? Partnership firm will also pay what? Surcharge. Total income, whatever tax calculated, special tax, normal tax, total tax. On that total tax, the partnership firm will also pay surcharge at the rate of 12%. What if cooperative society is there? Cooperative societies will also pay surcharge. Normal tax plus special tax, both taxes taken together, total surcharge 7%. If the total income increases 1 crore, if the total income exceeds 10 crore, then the rate of surcharge for cooperative societies will become how much? 12%. And the same rates of surcharge are applicable for domestic companies also. But for foreign company, the rates of surcharge will change. It will become 2% and 5% if the total income exceed 1 crore or exceed 10 crores. There is a concept of rebate also, which we have studied. Rebate is available only to individuals who are residents and whose total income does not exceed 5 lakhs. They will get rebate of entire tax or maximum 12,500, whichever is lower. If your tax is less than 12,500 or it is equal to 12,500, take the entire tax as what? Rebate. Don't pay any tax. But if your tax liability happens to be more than 12,500, we will give you a rebate of 12,500, the balance tax you are supposed to pay. But remember, one tax you cannot claim as rebate. The tax on LTCG 112A, that you cannot claim as rebate. Yes or no? This entire discussion we have done so far. Okay. Now, while discussing, I told you that what if someone's birthday falls on 1st April? That person, that individual is of age 59 or 79 in this year. So, will it be considered that he has attained the age of 60 year next year or this year itself? This year itself, as on 31st March, he has completed that age. So, from this year onwards, he will start getting the higher basic exemption limit of 3 lakhs or 5 lakhs as the case may be. Yes or no? So, entire discussion I have done. Okay. Now, there is a small concept of marginal relief. Once we are through with this concept, the chapter will be over. But before that, I would like to tell you about one more concept. See, whenever you calculate your total income, no. See, when I write this thing, no, total income, you are supposed to think that this includes special income also, this includes normal income also. I am talking about total income, the income on which you are supposed to apply the tax rates. Yes or no? Some part you will apply special rate, balance part you will apply normal rates. Yes or no? So, I am talking about total income, total income. And how to calculate this total income? The entire process we have learned. Yes or no? So, calculate your total income. On that total income, apply the tax rates, calculate the tax, apply surcharge if applicable, apply rebate if applicable, then you will get gross tax. Understanding? Add 4% also, then you will get gross tax. Out of that gross tax, you take the credit of prepaid taxes and all. TDS, TCS, you will get net tax or refund. So, on this total income only, by applying the tax rates, you are getting what? You are getting the final tax liability, which is known as net tax liability, or you get the amount of refund, final amount of tax. Now, what if this amount as well as this amount is not in multiple of rupees 10? Then there is one section 288A and there is another section 288B. These sections say that your total income or your tax liability or refund amount, if it is not in multiple of rupees 10, you are supposed to convert it into multiple of rupees 10. What? You are supposed to convert it into multiples of rupees 10. So your total income also you are supposed to convert in multiple of rupees 10, as well as your tax liability or your refund amount, you have to convert it into multiples of rupees 10. Sir, what do you mean to say? For example, if the amount is 12,14,412, tell me, is this amount multiple of rupees 10? What if your total income is this much? And if you are writing this total income and coming in the, you are coming out of your exam hall writing this amount as your total income, no, your 1 mark will be deducted. Because you forgot to round it off in the multiple of rupees 10. The examiner can very well deduct 1 mark for this. 288A says that your total income has to be rounded off to the multiple, nearest multiple of rupees 10. What? Nearest multiple of rupees 10. Not just the multiple of rupees 10. You have to convert it into the nearest multiple of rupees 10. Now you will have to write amount, which is exactly the same, but that amount should be the multiple of rupees 10. So you write down 12,14,410 and you can write down 12,14,420. These are the two multiples of rupees 10 which can be replaced for this amount. But you have to replace this amount by the nearest multiple of rupees 10. Come on, tell me which is the nearest one? 410 or 420? To reach 420, you will have to move 8 steps ahead. But to reach 410, you will have to come 2 steps back. Which is the nearest one? 410. Amount will be rounded off to 12,14,410. Getting my point? As per 288A, rounded off to 12,14,410 if it is a total income. What if your tax liability or refund amount is there? For example, your tax liability is 2,19,917. Now see, I will write down. It can either be written as 2,19,920 or it can either be written as 2,19,910. Which is the nearest one? To reach at 910, you will have to come 7 steps backward. But to reach at 920, you will have to move 3 steps ahead. Which is the nearest one? This one, no? So this amount will be rounded off to 2,19,920. Yes or no? For tax, you will do the same rounding off. But this rounding off will happen under section 288B. You will not write 288A. You will write 288B. But when you are rounding off total income, you will write what? 288A. Rounded off as per 288A. But rounding off happens at like same way. Yes or no? But now tell me one thing. I got it. What is your doubt now? I came to know. What is your doubt? Before even you ask, sir, what if this is 5? I can go 5 steps back also. I can go 5 steps ahead also. Both are nearest only. So remember, always move ahead. Always walk ahead. We never walk back, no. We walk ahead. So walking 5 steps ahead is better than going 5 steps backward. Getting my point? So always check what is the last digit. If the last digit is 5 or more, round off to the next higher multiple. And if the last digit is less than 5, round off to the earlier lower amount. Yes or no? Of which is a multiple of rupees 10. Got it? So 5 or more, then higher multiple of 10. Less than 5, then lower multiple of 10. Got it? This was the concept of rounding off. So you have to round off your tax liability also, refund also as per 288B, and you have to round off the total income also as per 288A. Yes or no? Sir, read this part on your screen. Done, everyone? Sure? Now what we are going to do? We are going to do the last concept in this chapter. What is the name of the last concept? The name of the last concept is, sir, it is marginal relief. What relief? Marginal relief. Now wait, marginal relief concept will come only in those cases where surcharge is applicable. If surcharge is not getting applicable, forget about this. This concept is not applicable only. This concept comes into picture only if surcharge is getting applicable. Now tell me, is this concept applicable only to individuals or all the assessees? The answer is all the assessees. Understanding? You are any type of assessee, this concept will be applicable to you. All the assessees get the marginal relief. Now what is this concept? How the marginal relief is calculated, how the marginal relief is taken, from where this amount of marginal relief is available, all those discussion I am going to do now. Okay. Now let us take the example of one assessee. Any assessee you can take. You can take a company also. You can take the example of an individual also. Let us take an example of an individual. Okay. Now let's say that this is Kanu. Okay, Kanu, this is you. Now Kanu is having a total income. Kanu is saying that, sir, this year my total income was, sir, 51 lakh rupees. See, it can be 50 lakh 50,000 also. It can be 50 lakh 20,000 also. It can be 50 lakh 75,000 also. I have taken 1 lakh rupees over and above 50 lakhs so that our calculations does not get complicated. To make the calculation simpler, I have taken 51 lakhs. 1 lakh rupees over and above 50 lakhs I have taken. Yes or no? It can be any amount over and above 50 lakhs. Yes or no? So first of all, Kanu is saying that, sir, I have earned an income of 50 this year's total income I have calculated, sir. My total income is 51 lakhs. I said, very good, Kanu, congratulations. Now you are an assessee who is liable to pay tax as well as surcharge also. So Kanu is very happy, but at the same time she is sad also. Why sad? I will tell you. See, she is telling me that, sir, on this total income, I am liable to pay what? Tax also, tax. Now, let us assume that Kanu is not following 115 BSE. So, the normal tax rates which we have studied will be applicable. And the second assumption which I am making, that this total income does not include any special income. Sure? If special income is there, separated, special tax rate, balance income, normal tax rates. Why to do the complications if we can do the things simply? Yes or no? Let us assume that this total income does not include any special income. That means entire total income is normal total income. Come on, tell me. And if she is not following 115 BSE, that means she is opting out of 115 BSE. That means her tax rates will be applicable on this entire total income will be the normal tax rates, which we already have done. Now, can you apply those tax rates and calculate the tax? Wait, one by one we'll discuss. Okay. First of all, total income is 51 lakhs. Out of this, first 2,50,000 no tax. Then 2,50,000 to 5 lakh rupees of total income, she will pay 5%, 12,500. Then 5 lakh to 10 lakh rupees of her total income, that means this 5 lakh, she is going to pay 20%, meaning 1 lakh. Now tell me, if her total income is 51 lakh, how much total income goes above 10 lakhs? It is 41 lakhs. Above 10 lakh till 51 lakh, it is 41 lakhs. So on that 41 lakh, she is going to pay 30% tax. Yes or no? So 30% of 41 lakhs will be 12 lakh 30,000 if I am not wrong. Yes? 12 lakh 30,000 she is going to pay, but on 41 lakhs. But earlier slab 1 lakh also she is going to pay. Prior to that, one slab was there 5%, 12,500. She is also going to pay that 12,500. So the total tax which she is going to pay is how much? 12 lakh 30 plus 1 lakh plus 12,500 plus 0. Yes or no? So she is going to pay 13 lakh 42,500. This is the tax amount which she is going to pay. Yes or no, sir? Done. Now tell me, with this tax, is she liable to pay any surcharge also? Yes, because her total income exceeds 50 lakhs. So if the total income is more than 50 lakhs, on the entire amount of tax, she'll have to pay what? Surcharge. And the rate of surcharge in this case will be 10% only. Because total income is more than 50, but not more than 1 crores. Yes or no? So she will pay surcharge at the rate of 10%, and this 10% will be applied on this amount. So that will be 1,34,250. Now tell me how much total tax she is going to pay to the government. She will be paying 14 lakh. How much? 14 lakh how much? 67,000 750. Correct, no? Not correct? I'm relying on you for the calculations. 13,42,500. 1476 it is. 14,76,750. Now it is correct, no? Sure? Okay. So this much tax, including surcharge, she is going to pay. But along with this, on this tax, she is liable to pay 4% cess also. Don't apply 4% right now. Don't apply 4%. But she is going to pay tax including surcharge this much, and on this tax, she is liable to pay 4% cess also. But before applying 4%, she is worried now. What she is saying, sir, see, if I would have earned only 50 lakh rupees of total income, no, not 51 lakh. My total income is going only 1 lakh rupees above 50 lakhs. Can you see? Her total income is 51 lakhs. So the limit till which she is not liable to pay any surcharge, that is 50 lakhs. From 50 lakhs, her total income is going only 1 lakh rupees above. Getting my point? So there is an increase in the total income. And what is the increase in the total income over and above 50 lakhs? The increase in total income is only 1 lakh. And as a result of that, I am going to pay tax along with surcharge. Sir, if my total income would have been only 50 lakhs, no, I would have just paid tax. I would not have paid any surcharge. I would only have paid what? Tax. And the amount of tax which I would have paid, the amount of tax which I would have paid would have been how much? Come on, calculate. Up to 250, 0. 250 to 5 lakh, 5%, that is 12,500. 5 lakh to 10 lakh, 20%, that is 1 lakh. And total income over and above 10 lakh, up to 50, it is 40. So on 40 lakhs, 30% will be 12 lakh, 12 lakh plus 1 lakh, 13 lakh plus 12,500. Can I say 13 lakh 12,500 she is going to pay tax? She would have paid tax. And that time, there was no surcharge which she would have paid. So tell me, how much total tax the government would have taken from her? 13 lakh 12,500. But see, is she going to pay this much tax? No, because her actual total income is not 50 lakhs, it is 51 lakhs. So total income is increasing only 1 lakh. And as a result of that, she is liable to pay surcharge also along with tax. And as a result of that, her tax increase. Tax is increasing by. This is very bad, no? This was the reason why she was not happy. That, sir, see, no, my total income is increasing. See, sir, I can see how can I even eat? I'm trying to eat, but the food is not getting beyond my throat, sir. I'm not able to eat. I'm choking, sir. I'm so much in pain. No, I cannot tell you anything, sir. See, my total income is increasing only 1 lakh rupees, sir. And as a result of that, the government is charging tax. Along with surcharge, I have to pay tax. And as a result of that, there is an increase in my tax liability. And you can see the increase in tax is more than increase in my total income. So this is not allowing me to sleep also, sir. I only gave her the blessings. That Kanu, I am blessing, I am giving you blessings. That one fine day, you see that the government will charge surcharge from you. It is not a curse which I am giving to her. Come on, if at all I tell you, no, that it is, if I tell you that government will charge surcharge from you, that is a blessing from my side. Because I want all of you to be rich, earn a lot of money and pay surcharge to the government. And my blessing became true. She started earning more. But what? At what cost? Just see. She is paying what? 1,64,250 more tax just for 1 lakh rupees increase in her total income. If the government charges this much extra tax, it will pinch her or not? Tell me. And that is the reason why she will now be eligible to get what? Relief. So there is one equation which I will write now. And the equation is, if the increase in tax, meaning this amount, is more than increase in your total income, meaning this amount. Tell me, is this equation getting fulfilled? Increase in tax is more than increase in total income? Yes or no? Is this equation right or wrong? Right. Hence, Kanu will be eligible to get marginal relief. So to get the marginal relief, this is the precondition, that the increase in your tax liability should be more than increase in your total income. Yes or no? Hence, marginal relief will be given. Now, how much marginal relief she will get? Simple. Difference between increase in tax and increase in total income. Difference between increase in tax and increase in total income. So, how much was the increase in tax? 1,64,250. And how much was the increase in total income? 1 lakh. So, what is the difference between these two amounts? That difference is 164,250 minus 1 lakh, that is 64,250. My dear friends, this is the marginal relief which she is eligible to get now. So from her total tax liability, this much tax will be reduced, will be allowed to her as a marginal relief. Now tell me, what was the actual total income which she was earning? She was earning actual total income of 51 lakhs. On that, how much tax actually she was liable to pay? 14,76,750, including surcharge. So the government is saying, out of this, take a marginal relief of 64,250. That means the government does not want you to pay 14,76,750, because if you are going to pay this much, that means you are paying more tax. Increase in tax would be more as compared to increase in your total income. So wait, we are giving you 64,250 relief from here, marginal relief. Now reduce it. How much is the final amount? Come on, tell me. It will be 14,12,500. Please check once. So the government is asking you to pay only this tax and not this amount of tax by giving you 64,250 what? Marginal relief. Now earlier, when you were supposed to pay this, so difference between this amount and this amount would have been how much? 164,250. Now is the government asking you to pay 14,76,750? No, the government is asking you to pay only 14,12,500. Now can you calculate the difference between 14,12,500 and 13,12,500? Can you calculate the difference? Now the difference will not be 164,250. Now the difference will be 1 lakh. So your increase in tax will also be up to 1 lakh only. It will not be more than 1 lakh. If your total income is increasing by 1 lakh, your tax will not increase more than 1 lakh. Your tax will also be increasing by 1 lakh rupees only. Hello? Understood? So how much tax you are going to pay, including surcharge? 14,76,750? No. Take the marginal relief and pay 14,12,500. But wait. Don't forget to pay dowry to the government. 4% cess is a dowry, which you are not supposed to forget. So add that 4% to 14,12,500 now. Now the amount will be 14,69,000 if I am not wrong. If you add 4% also. So the tax including surcharge after marginal relief will give you tax including surcharge only. You are not supposed to pay this much tax including surcharge. Take this marginal relief and pay us tax including surcharge only 14,12,500. But on that you will have to pay 4% cess also, no? Add 4%. So what will be your final gross tax liability? It will be 14,69,000. Getting my point? I will take one more example. It will be clear. 100% clear. Don't worry. Did you understand this example? In the next example, you all will be giving me the answers, okay? And make the calculations properly this time. Now pay attention. Now let's take the example Akshaya. I gave the blessings, Akshaya. What? One fine day will come that the government will charge surcharge from you. And that blessing became true. And this year, this is our Akshaya, okay? And this year, Akshaya's total income was 1 crore 1 lakh. See why I am taking 1 lakh, you are understanding, no? To make the calculation simpler. It will not always be 1 crore 1 lakh. It can be 1 crore 2 lakhs also. It can be 1 crore 1 lakh 50,000 also. It can be 1 crore 50,000 also. It can be any amount. To make the calculation simpler and in order to make you all understand the concept so that the calculations does not get complicated. If you are stuck in the calculations, no, complications of the calculation, you will not understand the concept. That is why I am taking 1 lakh rupees more only. Getting my point? Now tell me, Akshaya, will you pay tax? Yes or no? So can you calculate your tax, Akshaya? Tell me, what will be your tax here? First 2 lakh 50. Are you a senior citizen, Akshaya? No, na? Not a senior citizen, no. Because you are not 60 or more. Resident, but not 60 or more. So apply normal rates. 2 lakh 50, no tax. 2 lakh 50 to 5 lakh, 12,500. 5 lakh to 10 lakh, 1 lakh rupees tax. And any total income over and above, what? 10 lakhs. So our total income is 1 crore 1 lakh. So how much is over and above 10 lakhs? 91 lakhs. On that 91 lakhs, apply 30%. That will be 27 lakh 30,000 plus 1 lakh will give you 28 lakh 30,000 plus 12,500 will give you 28 lakh 42,500. Everyone getting this amount? Yes or no? So this will be 28 lakh 42,500. Now tell me, Akshaya, my blessings were that you will be paying surcharge. That you already started paying long back. Now your surcharge rate will increase, madam. How much surcharge will you pay? 10% only. You had been paying 10% till now. But now your surcharge rate will increase and it will become 15% instead of 10%. Yes or no? Because your total income is increasing 1 crore mark. So the surcharge which you are going to pay, that surcharge will be at the rate of 10% or at the rate of 15%. It will be at the rate of 15%. Yes or no? So this will be 4,26,375. Done? So can you please total this for me? This will be 32,68,875 if I am not wrong. This is the tax including surcharge which she is going to pay. But like Kanu was very upset, no? She is also very upset. She is saying, sir, my total income crosses 1 crore rupees by only 1 lakh rupees. See, if my total income would have been 1 crore, no sir. If my total income would have been only 1 crore, I would have paid how much tax, sir? I would have paid 28 lakh 12,500 tax, and with this tax, I would have paid only 10% surcharge, sir. And that would have been how much? 2,81,250. So, sir, my total tax liability would have been how much? 30 lakh 93,750. Yes or no? 30 lakh 93,750. Please check the calculations. Please check the totals. Totals are okay, no? Because I am completely relying on you for these calculations, okay? No, total should not be wrong. Please check it once. Done? Now, please tell me, Akshaya will say that, sir, see, no, my total income, no, total income is increasing by only 1 lakh rupees, sir. And as a result of that, with my tax, now I am supposed to pay surcharge at a higher rate, which is not 10%, which is 15%. Understanding? If my total income would not have been increased by 1 lakh, I would have paid surcharge how much? Only 10%. But since my total income increases by 1 lakh, and as a result of that, I am crossing that 1 crore mark, I will be now paying tax along with a higher rate of surcharge, which is not 10%, which is 15%. You please check the difference between the tax liability. Sir, just 1 lakh rupees of increase in my total income, and as a result of that, what is happening? Increase in my tax is happening how much? 1,75,125. Increase in total income only 1 lakh. And because of that, surcharge rate got increased. And as a result of that increase in surcharge rate, your tax liability is increasing by more than 1 lakh. Tax liability is increasing by 1,75,125. So apply that equation. What equation was there? Increase in tax. Is this amount more than increase in total income? If the answer is yes, and in our case the answer is yes only. Will she be eligible to get the relief? The answer is yes. How much? The difference between these two amounts. And the difference is how much? 75,125. So how much is her actual total income? 1 crore 1 lakh. How much tax including surcharge she is liable to pay? This much. But from this tax, she will now get a marginal relief of 75,125, so that her tax liability becomes 31,93,750. So government says, don't pay this tax, pay this tax. Your tax including surcharge, we will not take 30 to 68,75. Tax including surcharge, we will charge only 31,93,750. Now please check the difference between this and this will not be 175, 125. It will be only 1 lakh rupees. So your tax will also increase by 1 lakh only, not more than 1 lakh. Getting my point? But wait, here 4% cess will also be applied, sir. And after applying the 4% cess, 33,21,500. This will be your gross tax liability. Got it, sir? Two examples we took. Two examples. Both examples for individuals. You can say, I can make hundreds of examples here. Now what if the total income increases 2 crores? Calculations will remain same. Hello? But now instead of 15, the surcharge rate will be applicable 25%. What if the total income increases 5 crores? Calculations will remain same. Hello? Process will remain same. But now instead of 25%, the rate of surcharge will become 37%. Understanding? So I'm not getting into those things now. Will you be able to do? Yes? Now let's take an example of a company. Can the company get marginal relief? Yes or no? Company can get, no? All the assessees are eligible for marginal relief. But now for companies, the calculations will become more simpler. Why? Because for companies, there are no slab rates. Only flat rate is there. Right or no? So for example, if there is a company, name of the company is XYZ Private Limited. This is a company, and for example, this is a domestic company. Okay. This is a domestic company. And this company is having a total income in this year amounting to rupees 1 crore 3 lakhs. How much, sir? 1 crore 3 lakhs. And sir, for this domestic company, the turnover of previous year 20 to 23 was also given in the question. The turnover of previous year 20 to 23 was only 100 crores, sir. Meaning less than 400 crore. So what will be the tax rate applicable to this company? 30% or only 25%? Only 25%, sir. Yes or no? So now I will apply 25% on this income only. Sure? Come on, tell me. So, on this, if you apply 25%, calculate tax at the rate of 25%. What will be the tax amount? 2,57,000. Sorry, 25,75,000. Everyone getting this? 25,75,000? Yes or no? Now, is this company liable to pay surcharge? No. Yes. And what is the rate of surcharge for companies? You will apply 10%, you will apply 15%, or the company's rate of surcharge you will apply here. And the rate of surcharge for the company was 7% if the company is a domestic company and its total income increases 1 crore. Yes or no? So will you apply 7%? Yes. So add surcharge at the rate of 7%, 7% of this amount. Calculate please. How much is the amount? Tell me. 1,80,250. Now add both these amounts. 25,75,000 plus 1,80,250. Add these two. 27,55,250. 27,55,250. Now wait. Let's check. If the total income was only 1 crore, the company would have paid tax. How much? 25%. And that tax would have been 25 lakhs only. Yes or no? Would the company have paid any surcharge? No. Because till 1 crore, there is no surcharge for the companies. Now, can you calculate 25 lakhs? Yes. Now, please check. Please check now. Increase in total income is how much? Increase in total income is by 3 lakh rupees. And as a result of that, surcharge is charged. Okay. And as a result of that, see, what is the increase in tax? Come on, tell me. What is the increase in tax? Increase in tax is 2,55,250. Everyone. Now, equation. Increase in tax should be more than increase in total income. Meaning, this amount should be more than this amount. Is it more than 3 lakhs? Hence, no marginal relief. Your tax should increase. Increase in your tax should be more than increase in your total income. Only then you are going to get what? Marginal relief. But is your tax, increase in your tax, is it more than increase in your total income? No, your total income is increasing by 3 lakh rupees. And see, your tax is increasing by only 2,55,250. And you are still asking for marginal relief. Poda. Po. You are not supposed to come here. Don't come to us to ask for what? Marginal relief. We are not going to give you. So how much tax you are liable to pay? Come on, tell me. How much tax you are liable to pay, macha? 2750 by 250. No, pay this without any marginal relief. But wait, 4% says also you are supposed to add 4%. Therefore, no marginal relief. So after adding 4%, 28,65,460, 28,65,460. This will be your final tax liability, including health and education cessa. Now, let me come to my tax liability calculation. See, can you see tax liability calculation? I have given you a format over here. This is the format which I showed you in the beginning of the class today. Yes or no? See, before applying health and education cess, here, you are supposed to check for marginal relief also. Check for marginal relief. And if marginal relief is there, take the marginal relief. After that, whatever tax remains, on that you apply 4%. Got it? But wait, marginal relief will always come, or it might come. It might come. And it will come only in those cases where surcharge is getting applicable. So if the surcharge is getting applicable, in all such cases marginal relief will come? No. If surcharge is getting applicable, then marginal relief can come. Yes or no? In our all the cases, marginal relief came? No. In first two cases came. But in the last case, even though surcharge was applicable, still we did not get any marginal relief. But marginal relief, this concept you will talk only if you are applying surcharge. So while applying surcharge, make yourself a little bit cautious, be a little bit attentive that you have to check for marginal relief also. Now see, you will get an idea that sir, my total income when I calculated in the exam, no, total income was 51,22,000. You calculated your total income in the exam and the amount came 51,22,000. So it was a amount higher by 1,22,000 only as compared to 50 lakhs. So see, there is small increase in total income, and as a result of that, marginal relief might come. That time be attentive. But what if your total income, which you calculated in your exam, would have been 58 lakhs? No need to check also. Because even if you will check, marginal relief is not going to come because your total income increases by 8 lakh rupees over and above 50. So it will be just a waste of time checking marginal relief. And this concept comes in the exam for MCQs. If you are not aware about this concept, just imagine 2 marks MCQ, you will lose 2 marks in the exams. And how easy it is to get those 2 marks in the exam if you know this concept. Understood? So this brings to us at the end of this chapter, chapter number 1, basics and introduction. Okay. So whatever discussion which is required for us to move ahead from here in our direct tax syllabus, I have done all the discussion with you. Okay. Now what we are going to do, now we are going to start with a new chapter now, altogether a new chapter. Okay. See. The name of your new chapter is Residential Status and Scope of Total Income. But it is written like this. Residential Status and Incidence of Tax. Incidence means chargeability of tax. We call it Scope of Total Income. For this, we'll be doing section number 6, and for this, we'll be doing section number 5. Incidence of tax means scope of total income, meaning that which incomes will be covered in your scope on which you are liable to pay tax, and which incomes are not going to be covered in your scope, meaning on those incomes you are not liable to pay tax. No need to include those incomes in the computation of your total income. Getting my point, everyone? So pay attention now. First we'll discuss section 5. What is section 5? Okay. Now pay attention. Tell me how many sources of income are there? How many sources of income are there? I will always try to ask those questions which will be a trap for you. You are supposed to identify those questions, that is it a trap which sir is putting in front of us? I did not ask you how many heads of income are there. I asked you how many sources of income are there. Sources. What do you mean by source? See, for example, I am working in some company and that company is paying me what? Salary. So that company is the source of my salary income. Can I work in one company in the previous year? Yes, I can work in 2 companies also to get salary income. So how many sources of income do I have now? Two sources, two employers with whom I am working. Morning till afternoon I'm working in one company, and evening till late night I'm working in another company. So both the companies paying me what? Both the employers paying me what? Salary. So I'm earning salary from this source also. I'm earning salary from this source also. How many sources of income do I have? Two sources. Simultaneously, I have one house property which I have given on rent, and from that house property which I have given on rent, I'm earning rental income also. Can I say that house property which is giving me that rental income is the source of my rental income? Yes or no? I'm having a bank FD. From that bank FD, I'm getting some interest. So what is the source of my interest income? That bank FD, no? Can I do a business, and from that business can I earn some profits? So what is the source of my profits? That business only, no? Now tell me, how many house properties I can have which I can give on let out and I can earn the rent? How many house properties can I have? I can have multiple house properties. I can have multiple house properties means multiple sources of income. But all those sources of income and its income will be classified under the head house property. How many businesses can I have? Come on, tell me. I can have n number of businesses. I can have 5 businesses. I can have 10 businesses. Just think about Ambani and Adani sir. How many businesses they have? They have multiple businesses. But business, all the businesses and their income is classified under one head, that is known as PGBP, business and profession. How many FDs can I keep in the bank? How many bank accounts can I have? I can have multiple bank accounts, multiple FDs in the bank. So all the FDs, all the bank accounts which I am having is a separate source of income for me. Source of income means the place from where you are getting income. Now tell me, for a person like me, how many sources can I have? I can have 5 sources of income. I can have 7 sources of income. I can have 10 sources of income. How many sources of income do you have? Zero. Because there is no source from where you are earning income right now. Yes or no? I might have 3, 4, 5 sources of income. See, teaching you is my profession. So this profession is my one source of income. Simultaneously, I am doing my CA practice also. That CA practice is also my profession. So that is another source of my income, my CA practice. Okay. Now, for example, if I'm employed in some company and that company is giving me what salary. So that salary which I'm getting from that company is also my source of income. I have 4 houses. All the examples which I'm giving you in the class regarding myself, okay, are all imaginary. No relation with reality. And if there will be some real example will be there for myself or for my life, okay, I will tell you this is a real example which I am giving you. But till the time I am not saying that, assume all the examples which I am giving for myself will be imaginary only. That is just given to you in order to make you all understand. Listening, no? Now pay attention. What I am trying to tell you, I have 4 properties here in Gujarat. All the properties I have rented and one property I am staying. So how many sources? 4 sources. So if anyone asks you know that how many sources of income are there, you are always supposed to say sources cannot be counted. There can be n number of sources of income from which an assessee can earn the income. Now all those sources necessary to give you taxable income? No, because from some sources you will be earning an income which is exempt. Forget about them. You are supposed to consider only those sources which are giving you taxable incomes. Now the taxable incomes which you are earning from the sources, how many sources can give you taxable? Multiple sources can be there from which I am earning an income which is taxable. But now these sources giving me these incomes, can these taxable incomes be included in the computation of my total income? Depends on 2 things. Number one, my residential status, and number two, the income which I am earning, what is the nature of that income, whether that income is Indian income or a foreign income. Getting my point? So we will be first discussing very important thing, that if you are an assessee, okay, you are an individual or HUF assessee. See how many persons are there? 7 persons are there, no? So we are not talking about all the 7 persons. Out of 7 persons, we are talking only about 2 persons right now. And for other persons, remaining 5 persons, we will be talking after we are done with this. Okay. So tell me, I am an individual or HUF. Now, I am earning few incomes. So I will be earning incomes during the previous year. Out of all those incomes, I will have to check the nature of my incomes which I am earning during the previous year. Few incomes I have earned during the previous year, they turn out to be Indian incomes. Few incomes I will be earning during the previous year, those incomes will turn out to be foreign incomes. Sir, how to decide that an income is an Indian income or a foreign income is altogether a different discussion which I am going to do right now. Not right now, but later on. But first of all, understand whatever incomes you are earning during the year from various sources which are taxable incomes, okay, no? These taxable incomes from different sources, either those incomes will be Indian incomes or those incomes will be foreign incomes. Sir, how to identify that it is an Indian income or a foreign income? We will discuss later. But the incomes which you have earned during the previous year can either be Indian income or the income can be foreign income, sir. Now wait, in the foreign income also, there are two types of foreign incomes. There are two types of foreign incomes. A foreign income which I am earning from a business or a profession which is outside India, but that business or profession is controlled from or it is set up in India. So business is getting controlled from India, but where is that business? Outside India. Profession was set up in India, but where I am doing the professional activities? Outside India. Getting my point? Where is business? Outside India. Where is profession? Outside India. But that business is getting controlled from India. But that profession was set up in India. From that business, from that profession, if I am earning any foreign income, that foreign income will be classified as my Part A foreign income. Yes or no? Sir, what if I am earning income from any other source which is not a business or profession, this type of business or profession? Any foreign income which I am earning from other sources, which is not a business, not this type of business or profession. That means that foreign income will be treated as Part B foreign income. Part B means foreign income from all other sources. Now, tell me one thing, you have to identify that whether that foreign income is a Part A foreign income or Part B foreign income. You are supposed to identify and tell me, okay? I just want to see whether you are able to identify it or not. We will have a discussion about this in detail. What income is Indian income? What income is a foreign income? Absolutely don't worry. Okay? But tell me, I have one business which is outside India, in Germany. From that business, I am earning a foreign income there only. And that business, I am controlling from Mumbai. Tell me, the business is outside India, in Germany, giving me foreign income there only. But is that business controlled from Mumbai? Yes, India. So whatever income that business is going to give me, foreign income, that foreign income I will classify under A or B. It will be classified as A because business outside India controlled from India, and that business is giving me a foreign income. Now tell me the same business I'm having in Germany and I'm controlling that business in Germany, from Germany only. Now you cannot classify that foreign income from that business under category A, that will be B, because that income, that business is not controlled from India. See, I have one profession which I had set up outside India, and that profession is giving me a foreign income outside India. A or B? Profession also outside India, it was set up also outside India. It is B. I have an employer outside India for whom I am working outside India. He is giving me salary outside India. A or B? It will be B. Because that is not my business or profession. No, I am into employment, earning salary income. Yes or no? Akshay, are you understanding? Bharti, everyone? Sure, no? Now tell me, if I am having a property outside India and that property is giving me a foreign income, tell me, A or B? B. If I am having a bank account outside India, from that bank account I am earning interest outside India, foreign income, A or B? B. Only one business or profession which is outside India, which is controlled from India or which was set up in India, only then that business or profession giving you foreign income will be classified as A. Otherwise, all the foreign incomes will be classified as B. Sure? Now see, this individual, no, during the previous year, 24-25, this individual or HUF might have multiple incomes. Now, I will have to check that whether my client, this individual or HUF, I am a chartered accountant, no? So, as a CA, I will have to check that what types of incomes my client, who is individual or HUF, is earning during the previous year. So, in the previous year, 24-25, when I checked, my client told me that I am earning this income, this income, this income. He has told me the multiple incomes he is earning. Now, out of all the incomes, I will have to now classify. I will have to apply my brain. I will have to apply my knowledge of income tax. And I will have to check that whether this income which my client is earning happens to be an Indian income or a foreign income. And if it is a foreign income, then it is a part A foreign income or part B foreign income. So likewise, all the incomes which he is earning during the previous year, individual or HF earning during the previous year, I will classify, I will mark all those incomes. Okay, this income Indian income, I for Indian income, this income foreign income part B, this income foreign income part A. Likewise, I will mark all these incomes. Now, once the identification of the income is done, no, now I will come to the second part. Now I will see that this client who is earning these type of incomes, I will have to check what was the residential status of my client. Now I will have to check the residential status, and for that I will have to go to section number 6. Now how to determine that residential status is given in section number 6, that we are going to discuss later, that how to determine a residential status of individual or HUF. For that, section 6 needs to be studied. Hello sir, did I tell you how to identify Indian income, foreign income? No. But whatever incomes will be there will be either Indian or foreign. That you know na. Did I tell you how to determine the residential status? No. But just understand that for individual or HUF, I will have to check section number 6. And by checking section number 6, I will come to know that whether this individual is resident and ordinary resident, ROR, or he is resident but not ordinary resident, RNOR, or he is a non-resident. He can have all the three statuses together for 1 year or only one status in this year. Only one status. There are three possibilities. But out of these three possibilities, only one possibility can happen in this year. If he is a resident, he can be ordinary resident for this year. Then he cannot be RNOR or NR because he is already ROR. Getting my point? But if we classify him as resident but not ordinary resident, then he will be for this entire year treated as what? RNOR. Then in that case, he cannot be ROR or NR in this year. one previous year, for this 1 year, only one residential status is possible. Getting my point? I cannot say that during my previous year for different income, my different residential status. No. Your residential status for this previous year, if it is fixed as non-resident, for the entire previous year, for all the incomes you are earning, your status will be non-resident. Based on the non-resident status, your incomes will be either included or not included in your total income. Getting my point? For few incomes, consider me non-resident. For few incomes, consider me as what? ROR. No. One previous year, only one residential status. And what residential status will be fixed will be decided by section number 6. Check section number 6. Once the residential status is fixed, that residential status you can take for all your incomes. Understanding? Everyone? Now please pay attention. You can have any of these three residential status. Your residential status can be ROR. Your residential status can also be ROR. It can be NR also. Ordinary resident, or you can be not ordinary resident, but you are not ordinary resident. Or you can be non-resident only. But how that will be decided? For that we are going to study section number 6. Okay? But now please wait. Are you an individual or HUF? Yes. Earning income in the previous year? Yes. Out of all the incomes which you are earning during the previous year, will you take all the incomes in the computation of your total income? Hello? Will you take all the incomes? Will you leave all the incomes? You will take few, you will leave few. Where it is written? That is what we are going to do now. Section number 5 says that if you are individual or HUF, based on the type of income which you are earning and based on the residential status, now section 5 will tell you that okay, out of this income for this residential status, this income will be included or will not be included. Getting my point? So if you are earning any Indian income, which income? Indian income. Irrespective of your residential status, it will always be included in the computation of your total income. Whether you are ROR, RNOR or NR, we don't care. If you are earning Indian income, that Indian income you will have to show in the computation of your total income. Please include all the Indian incomes in the computation of your total income, irrespective of your residential status. Getting my point? Because that is an Indian income. On that, Government of India will charge tax. No matter who you are, no matter what your residential status is, Government of India is eligible to charge tax, and everyone who is earning this income, irrespective of residential status, has to pay tax on this income. So please include this income in the computation of your total income. Getting my point? But if someone is earning what? Foreign income, part A foreign income. Which foreign income? Part A foreign income. That will be included in the computation of that individual or HUF only if his status is resident. They did not mention ordinary or not ordinary. They just said resident. So resident individual or HUF can be ordinary also. It can be not ordinary also. So section 5 says that if you are earning part A foreign income is taxable for all residents. All means all residents. This, wait, just a moment. This as well as this. And then section 5 becomes silent. Meaning that if you are a non-resident earning this foreign income, section 5 says that it is to be included. It will also be covered in your scope? No. Meaning that if you are non-resident, don't include this in the scope of your total income. You are not supposed to pay tax on this income in India because your status is non-resident. and this income is foreign income for you. But if you are earning part B foreign income, on that income also you will pay tax in India only if you are ordinarily residing in India. Ordinarily residing in India. If you are ROR, no, then your part B foreign income will also be taxed in India. But it is not about RNOR or NR. It is only about ROR. Meaning that if you are RNOR earning this income or NR earning this income, will you include this income in the computation of your total income? No. It is includable as per section 5. It is includable in the computation of total income only of ROR. Will you include this part A income in the computation of your total income if you are NR? No. It is includable in the computation of total income only of residents, meaning ROR as well as RNOR. But if you are earning Indian income, no, you have to include in the computation of total income always. Whatever may be your status, ROR, RNOR, NR will not make any difference. Getting my point? So now please pay attention. What I want to show you here. I want to show you that if you are ROR, no, then this is your scope of total income. If your status for this year is ROR, then whether you have earned any income in India or you have earned any income from foreign, A or B, will not make any difference. You have to include all the incomes in the computation of your total income because your status is ROR. Global incomes, whether earned in India or foreign, all the incomes, if your status is ROR, you will show all the incomes in the computation of your total income. Understanding? But if your status was RNOR, what was your status? RNOR, then please include these income in the computation of your total income. That means, can you see? The scope was reduced. This income you are not supposed to include. So in your total income, which incomes you will show? All the Indian incomes and only part A foreign income, not part B foreign incomes. But if your status happens to be non-resident, no, then include all the Indian incomes in the computation of your total income, leave all the foreign incomes. So now tell me, who has the widest scope of total income? ROR. And who has the narrowest scope of total income? NR. So as a taxpayer, as an assessee, what would you like to become? NR, obviously. Because if you become NR, then your total income calculation will include only your Indian incomes, no? Foreign incomes will be left out. So your total income will be least. Getting my point? And what the department will always try to make you? Try to grab you, drag you and make you resident. And once you become resident, no, by default you are ordinary. By default you are ordinary. But we will give you some chance so that you become not ordinary. But if you miss those chance, you don't become RNOR, you are ROR. So that we charge all your incomes to tax in India, whether it is Indian or foreign. Getting my point? So it is a tug of war between the department and between the assessee. And as a chartered accountant, you have to advise your clients. If you have few clients who are, NRIs, without asking you, your client will not step in India. And if you will tell him, no, go away, poda, he'll run. Because if he does not follow your instructions, no, he'll go mad because of these things. And even that practice also, many chartered accountants are doing. But this is very, very, very interesting when you will go to final CNO. So there is one different aspect altogether. You learn non-resident taxation. In non-resident taxation, these things, come out very interestingly in front of you. But first of all, you learn all those things only if your base is strong from here. Understanding what I'm trying to tell you? And please don't take this chapter lightly. There is always at least 4 marks question from this chapter in the exam. Minimum 4 marks. Either it will be, asked in MCQs or as a part of main question. But this part also is very, very, very important. Getting my point? This is the first 2 chapters which we are doing, no? That is the backbone of your entire income tax. And if you don't do these 2 chapters properly, your entire DT preparation will be at stake. That is the reason why I spent more time in the first chapter. Otherwise, everywhere the first chapter gets completed within 1 lecture, 3 hours. That's it. This, gone. And when the question comes in the exam, students are also gone. Getting my point? Okay. Now pay attention. This was all about individuals and HUFs. Now tell me, if you are an individual or you are HUF, what could be your residential status, ROR, RNO or NR? We will decide as per section 6. We have to learn that. What type of incomes you can earn? You can earn Indian incomes or you can earn foreign income, part A or part B. How to identify? That we'll learn later on. But if you have earned any Indian income, will you check your residential status or you will always include in the computation? Always include. For Indian incomes, no, taxability does not depend on residential status. It is always taxable in India for all types of assessees. Yes or no? But for the purpose of taxability of foreign income in India, your residential status becomes very important. So why do you determine the residential status? It is determined to have an idea whether your foreign income will be taxable for you in India or not. That is the reason why you check what? The residential status. Now come on, if you are earning foreign income part A during the previous year, any income you have earned and that income happened to be foreign income part A, what will you do? You will have to include that foreign income in the computation of your total income. If your status for this year was resident, ROR also, RNOR also. What during the previous year, if you are earning any income which is foreign income and that is foreign income part B, you will have to include that income also in the computation of your total income if your status is ROR. Finish. But if you are NR, no, don't include both the foreign incomes. Forget. Include only Indian incomes. If you are RNOR, no, include only one foreign income. Forget about all the other foreign incomes. And if you are ROR, no, your global income you are supposed to include. Understanding? Now this was all about individual HUF. Now tell me how many percent? 7% are there. Okay. So I will be now having a discussion about all persons other than individual or HUF. Come on. Only individuals HUF earning or other persons can also earn the income. Other persons can also earn, no, company covered here, partnership firm covered here, AOPBY covered here. And if they are also earning what? In the previous year 24-25, even they are earning what? Incomes. Yes or no? And from their income, total income will be computed for them also. So in their total income, which incomes will be taken and which incomes will not be taken? Depends on 2 things. Nature of the income and their residential status. Hello? Likewise, for individual and HUF, 2 things were important. No, what? The nature of income of that individual or HUF or their residential status. Based on that, we decided that whether that income has to be included in the computation or not to be included. Same way, for others also, we have to check the nature of income and we'll have to check their residential status. The income which they might be earning will be Indian income or foreign income. Now I will not bifurcate foreign income into A or B. I will write both A and B together. All the foreign incomes covered at one place. And why? I will give you the logic also. Wait. Now tell me, for all the other persons, what will be their residential status? For them, their residential status I will have to go and check section number 6, because section number 6 will tell that how to determine the residential status for all assessees. Individual HUF, you will go to section number 6 only. And for all other persons also, you will go to section number 6 only. Section number 6 will tell you that how to determine the residential status of any person. So when you will go to section number 6, you will check for individual HF, residential status is determined in this manner, and for other persons, residential status is determined in this manner. So we'll go and check in section number 6 that how to determine the residential status. And you won't believe, their residential status can either be R or NR. That's it. They can either be treated as resident, and if they are not resident, they are non-resident. That's it. And once any assessee becomes a resident, no, as per section 6, by default he is what? Ordinary only. But there are chances given to him to make him what? Not ordinary resident, and that chances are given only to individual and HF and not to anyone else. So if you are individual HF, only then you will get a chance to become what? Not ordinary resident. But if you are any other person, once you become resident, no, by default you are ordinary, no chances are given for you to make you what? RNOR. Hence you are by default what? Ordinary if you are what? Resident. Getting my point? Now tell me, for ordinary resident, global income is taxable or not? Indian income as well as foreign income, part A, part B. So what is the point of bifurcating part A, part B? If part A is also taxable for him and part B is also taxable for him. Getting my point? So even this Indian income as well as all the foreign incomes will be covered because he is a resident. This assessee is a resident, and becoming a resident over here means ordinary only. There is no concept of not ordinary resident for all other persons. Getting my point? Now if that person becomes a non-resident, he will include only Indian income, but he will leave all the foreign income, whether A or whether B. For non-resident, A is also not taxable and foreign income B is also not taxable, no? So all the foreign incomes will be ignored, whether A or B. This is the scope of total income as per section 5 for all the persons other than individuals and HUFs. I hope this is clear, everyone. Now this scope, no, is nothing but this is incidence of tax. Liability of tax, that means which incomes are liable to be included in the computation of total income so that it could be taxed in your hands. We call it scope of total income. This depends on two things. One, your residential status, and two, the nature of that income. Place and time of accrual or receipt of that income will decide whether that income is an Indian income or a foreign income. What did I say? Place and time of accrual or receipt of that income will decide whether that income is Indian income or a foreign income. That we will learn, that how to identify an income. That income, the moment you will see, you will come to know that okay, this is Indian income, we know this. But that thing we will do a little bit later. But first target would be to learn that how to determine the residential status of various assessees. Okay. So we will first learn that how to determine the residential status of individual. Then we will learn how to determine the residential status of HUF. Then we will learn that how to determine the residential status of all other persons other than individual and HUF. So first target would be section number 6. Once we are through with section 6, we will come to know that when to call an individual ROR, RNOR or NR. When to call HUF, ROR, RNOR or NR. When to call other persons a resident or a non-resident. That we are going to learn first. And once we are through with this, we will go and we will now check how to identify the incomes. And then we know that these are the incomes. These are Indian and foreign incomes. And we also know that how to now determine the residential status. Now based on this, we will decide and we will tell the clients that okay, this income is taxable for you, this income is not taxable for you. And wait, Macha, you are coming to India. If you stay more than this, no, you will become resident. I know this. Don't stay more than this. Stay less for less time so that you remain non-resident. At least your foreign income will be spared. It will not be taxed in India. Understanding? So those things you will be able to explain and you will be able to tell your clients only if you yourself know all these things. See, the law which you are studying with me, no, this is income tax law, Income Tax Act. It is a very complicated law, very complicated law. You don't have to study this law with brains. You have to study this law from heart. Okay, study by your heart. You'll learn, you'll understand everything. But the moment you will try to apply more, mind into it, you will fall into traps, different traps. Very complicated act. But if you also consider this law as complicated and you don't simplify this act for yourself, just imagine, will you be able to earn money? No. For you, it should be easy. Making the complex things easy for yourself will allow you to be a good professional. For others, it should be difficult. You have to go and tell others, Macha, this is difficult. Come to me. I will help you out. Only then you learn, no? And you yourself will be saying, no, very difficult, like others. Then will you be able to practice? No. The entire purpose for which you are doing CA will be defeated, no? A doctor cannot say that surgery is very difficult. I'm not able to do the surgery. Will he be able to treat the patients? Will he be able to earn? No. So you're a doctor, at least not for health, but financial health of the people, no? So have that mindset. Okay. Now let us move a little bit ahead from here. Now what I will be doing, I will be discussing residential status with you all. So one by one, we'll learn the residential status for different types of persons. And once the residential status is over, no, then we'll come to identifying the incomes. And then we'll solve few questions. First, we'll solve few questions on the basis of residential status provisions. Then we'll solve few provisions on the basis of scope of total income provisions. Then this chapter will be over. Very interesting and very easy questions. Don't worry at all. Okay. Now see, if I come to section number 6 now, section number 6 is talking all about residential status. That how to determine the residential status of any assessee. So section 6 will tell you that if you are an individual or you are an HUF or you are a firm or AOPBY or you are a company or you are any other person, everyone will go to section 6. Section 6 will tell everyone that okay, you are individual, you follow 6.1, 6.1a and 6.6. You will come to know what is your residential status. Okay, come HUF, you come here. You check 6.2 and 6.6. You will come to know your residential status. If you are a firm AOPBY, just check 6.2. You will come to know your residential status. If you are a company, go and check 6.3. If you are any other person, go and check 6.4. Getting my point? Under section 6 only, there are different clauses. Okay. Under each clause, it is written that how to determine the residential status of this particular assessee. So first I will go and check 6 clause 1, clause 1a, clause 6, yes or no. I will come to know that how to determine the residential status of an individual. Once we do that, then we will solve few questions on individual. How to determine the residential status of an individual. Whether whatever we have learned, we are able to apply that in the question or not. And we are able to identify the residential status of an individual or not. That is a basic thing which we have to learn. Okay. Now then thereafter we'll do HUF. These two clauses will do. Very easy. Once you finish individual, no friends, once you finish the residential status of individual, every other residential status all taken together will not take more than 10 minutes. Within 10 minutes, all the residential status you will learn. Very easy. But the most complicated part is what? Individuals. But that is not complicated, don't worry. People call it complicated. Very easy, very easy. Okay. So first of all, I will try to determine the residential status of an individual. So if I talk about an individual, so how to determine the residential status of this individual? So to determine the residential status of an individual, I will have to go and check two basic conditions which are given under 6.1. So two basic conditions are there which are given in 6.1. Those two basic conditions I will have to check. First condition is A, which says that if this individual stays in India for a period of greater than or equal to 182 days during the relevant previous year, then for that previous year he becomes a resident. Done. Apply some logic, no? There is no magic. Logic. How many years are there in a, how many days are there in a year? How many days are there in a year? 365. Divided by 2. Divided by 2, you will get 182.5. Bharti, please don't bring all these things right now. Huh? We are into something different. Just try to focus on this. After the lecture, no, I'll give you some time. Okay, we'll have a discussion about whatever your doubt is there. So please write down your doubt somewhere, because see, in between, if you're thinking about this doubt, no, you will have doubts in this one later on, because somewhere you are thinking about that doubt. So if at all some doubt is coming, no, write down that doubt and be with me in the flow. Definitely 100% whatever doubt you are having, no, none of your doubt you will keep with yourself. That is my responsibility. I will solve. Don't worry. Okay. But in between the lecture, if you will ask this doubt, no, if I'll try to address that doubt, the concept which I have already done long back. So right now, if we'll discuss this, it will deviate the discussion and it will be very much time consuming. So have this doubt after the lecture. Ask me. Okay, I will definitely solve. So first of all, tell me how many days are there in a year? 365. Divided by 2, you will get how much? 182.5. Meaning that 182 is a figure which denotes half year. Almost a half year. Yes or no? So just imagine if you are an individual and your stay in India during the relevant previous year is 182 days or more, meaning that your stay in India is for half year or more. You are staying in India for half year or more in this year. How can we bloody consider you as a non-resident? Your usual place of stay is in India, because more than half or more, you are staying in India only. You will be treated as a resident because basic condition A is fulfilled. Yes or no? Basic condition A fulfilled. Why? Because your stay in the relevant previous year is more than or equal to 182 days. If it is equal to 182 days, then also fulfilled. And if it is more than 182, then also fulfilled. Yes or no? But sometimes it might happen that your stay in India was less than 182 days. Don't worry. If you don't become a resident like this, we have other way to make you resident. But we will always try our hard to make you resident. If you're not becoming a resident like this, don't worry. We have one more easy way to make you resident. And that easy way is the second condition. If you don't fulfill this condition and become a resident, we have another way, meaning we have another condition. By checking this, we can make, if you satisfy this also, we can call you a resident. Either you fulfill A and become resident, then no need to check B. But if you don't fulfill this condition, then we have another condition, check that. Maybe you are satisfying that condition, condition B, and becoming what? A resident. Getting my point? Now what this condition says? Condition B says that your stay in India, if it is less than 182 days, then you are coming here. So stay in India should be less than 182 days. Then you are coming here. But it should be greater than equal to 60 days. during the relevant previous year. See, 182 days here. What did I mean to say? 182 days stay. Wait, stay in India should be greater than equal to 182 days during the relevant previous year. And here stay in India is less than 182, but it should be more than or equal to 60, meaning that this year you are staying at least for 2 months. Not half or more, but at least 2 months you are staying in this year, no? 60 days is what? 30 plus 30, 2 months. This year your stay is 60 days or more. As well as, what did I say? As well as your stay in India should be greater than equal to 365 days during last 4 previous years. In the last 4 previous years, that means if I am talking about our previous year, current previous year, your stay should be 60 days or more. But now take 4 previous years immediately preceding to your previous year. Your previous year is 23-24. 23-24, your stay should be 60 days or more. But 4 previous years immediately preceding to 24-25. Our previous year is 24-25. My mistake. 24-25 is our previous year. So in our previous year, your stay should be 60 days or more. But 4 previous years immediately preceding this. 4 previous year immediately preceding this. That is 23-24, 22-23, then 21-22, and then 2021. These 4 years, your total stay for all these years taken together should be 365 or more. So current year your stay, current previous year your stay should be 60 or more. And last 4 previous year, that means 4 previous year immediately preceding to current previous year should be total 365 days or more. Getting my point? If you have satisfied this as well as this, both the parts of condition B, meaning that you have satisfied condition B, and we can call you resident over here also. Getting my point? Now you will tell me, you will tell me. So there are 2 basic conditions. Basic condition A and basic condition B. And B is having 2 parts, first part and second part. Basic condition A talks about 182 days stay. B, part 1 talks about 60 days and part 2 talks about 365 days during last 4 years. Yes or no? Tell me, if basic condition A is fulfilled, will you go and check basic condition B? No need to check. You directly call yourself as a resident. Yes or no? But what if you have not fulfilled basic condition A? Now you will go and check basic condition B. And basic condition B, part 1 also fulfilled, part 2 also fulfilled. That means basic condition B fulfilled. That means you are a resident by satisfying basic condition B. But sir, what if basic condition A not fulfilled, B first part fulfilled, B second part not fulfilled? Meaning B is not fulfilled. To fulfill B, both the part must be fulfilled. Yes or no? You are satisfying first part, that means current year your stay is 60 days or more. But what about last 4 years? Last 4 years total stay, 365 days or more should happen, no? It is not getting satisfied, meaning B condition is not fulfilled, A is not fulfilled, B is not fulfilled. You cannot become a resident, you will become non-resident. What if sir, A is not fulfilled, you will go to B. Now what happens? B, last 4 years your total stay was more than 365, but this year your stay is not more than 60. Come on, what will you do? Non-resident, basic condition B not fulfilled. Hello? Now tell me, A is also not fulfilled, B part 1 is also not fulfilled, part 2 is also not fulfilled. You are a non-resident. Understanding? You have to check these 2 conditions, that's it. And these 2 are basic conditions. And out of these two conditions, any one condition if you satisfy, no, you become a resident. First condition you have to check 182 days or not. If not, then go to condition B. Condition B, if you fulfill, you become a resident. But if you don't fulfill condition B also, no, you will become a non-resident. And once you become a resident by satisfying basic condition A or basic condition B, any one condition you fulfill and you become what? Resident, no? By default you are ordinary. By default you are ordinary. But we will give you two chances so that you can make yourself what? Not ordinary resident. And those two chances are two extra conditions known as additional conditions. Any one condition out of those additional conditions you fulfill, you will be treated as RNOR. But both the additional conditions you don't fulfill, then you cannot treat yourself RNOR, you will remain ROR only. Yes or no? So we'll take our discussion ahead from here tomorrow, and tomorrow's lecture majority of the chunk will finish, and tomorrow we are going to start solving the questions. So from tomorrow onwards, all the lectures you will be sitting with your ICI study mat calculators. Okay? Because we are supposed to cover all the questions of ICI study mat. And few extra questions which I have in my question bank, which I will forward on the group. Okay? So you will get the extra questions for practice also. Okay? But those questions, once the chapter is over, no, till that time you have to solve all the questions. Maximum 2 days after the end of the chapter, those extra questions must be solved by you. And if at all you are having any doubts in those questions, you can freely ask me the doubts over the WhatsApp also, and in the class also. After the class will be over, I will be ready to address those doubts also. Done? So tomorrow we are meeting at the same time, 4 p.m. and from 4 till 8 we are taking the lectures tomorrow. Then tomorrow we are going to finish the major chunk of this chapter. Okay? So tomorrow, till then, bye bye. Okay? And now you can ask your doubt, Bharti.